Hello everyone, this is Teddy Keckstead. I'm from Forex Trading Unlocked, and we are here on Friday, July the 8th, 2022 with a Forex trading and cryptocurrency trading market analysis for you. We're going to go over some strategies, some signals, some analysis for you, and all kinds of news and all kinds of things to help you out in your trading to end the week and just get ready for next week as well. Before we get into everything, we're going to show you our disclaimer just to remind you that this webinar is for illustrative and educational purposes only. So it's very important that you are mindful of that. And if you have any questions about anything during this webinar, don't be afraid to chime in on the chat on either Discord, which we are now on live because of requests from many of our viewers. And also we are we are also on YouTube and Twitch as well. So without any further ado, we just want to remind you, if you have not done so already, please subscribe to our YouTube or our Twitch channel. You can also subscribe to us on Discord as well. We are now streaming live on there, so definitely anyone that's out there in Discord land that wanted us, start using that chat room up. And also, while you're at it, make sure you like and share us on Twitter and YouTube and Twitch as well. All right, so we got the live action screen here. We got a lot of stuff going on here. We have the Forex-trading-unlocked.com website pulled up for you here, folks. And we are going to have a lot to talk about today. So I'm going to be looking at different screens, so don't worry about my face bobbing around. You don't want to see just my eyes. But we have quite the volatility in the U.S. dollar today. We had unemployment claims, that was yesterday, unemployment number this morning at 7:30 Central Standard Time. And we've had quite some market action. The dollar first was very, very strong overnight. Then it got just crushed, and for a while ago, it would look like it was going to turn today. And now we have dollar strength roaring back up in certain markets, certain ones it's a little hesitant, and we're going to show you what's going on with all that. All right, so we're going to toggle down. We have the workstation pulled up on our Forex-trading-unlocked.com website. As you can see, the dollar index yesterday had a doji kind of formation. It was basically unchanged on the day. There was a lot of market action. However, it really ended up not doing very much, which is all right. So we have some trends that are going on with some of your major cross rates. We also have some markets that have been kind of going sideways for a while, looking for a breakout, and I think we have come to that point. Very interestingly enough, two things that help to drive some of the trends in the Forex markets is the crude oil market for certain currency crosses, and of course the interest rate quadrant for 30-year Treasury bonds and 10-year notes in the U.S. That definitely drives a lot of currency trends as far as most of them when it comes to dollar versus other currency crosses, because the central banks are right now in a tug of war in many different ways. So, and by the way, if you haven't tweeted out this video, which I'm doing actually right now, to spread the word and get some interaction, you never know who might have some questions that you might actually want answered. So, all right, cool, we got that going. All right, and now Dixie. So today, like I said, we have a little bit of action going on in the dollar index, and let's see the number one player, what's going on. All right, Euro US dollar sell rally forecast. We are now hovering just below the highs of the day in the Euro US dollar. How many of you out there in YouTube land and Twitch land are traders of the euro or the euro versus some other cross besides the dollar? If you have any questions about that, or if you have any input as far as this bearish trend that we're having and the new lows that we spiked today, we're getting really close to parity, folks. And I have to say, I got a big feeling we got a bigger chance of hitting parity in the Euro US dollar than we do getting any major sustained rally in the Euro US dollar. So very likely that today's little bounce is not going to be very sustainable. One of the main reasons why is if you take a look at the interest rate quadrant, we're going to look at the CME website here. Now remember, just as we're in delay, a little bit of a delay, futures are always in a delay. It's against the law around broadcast live futures quotes. But we do have the bonds that are trading down at 173.03 and the 10-year at 117.23. When it comes to the 30-year note, We had a nice little sell signal that happened the other day. I'll put that up. I think I have it in this one already highlighted. Here we go. Yeah, we do have it. Okay, so the Treasury bond market here put on a dark cloud cover sell signal 2 sessions ago. Yesterday had a nice follow through, and then obviously you can see right now we're trading at, what was it, 137.04. So if we take a little 137, oh, right there. Okay, we'll make this in, yeah, no, not yellow. That doesn't stick out as much. There we go, 137.04. So right, oh wow. This is very significant. We've taken out the upward sloping support line that is holding up the trend intact, and we're very close to our downside corrective zone of 136.22 to down to 135.11. So what does this have to do with the euro, US dollar, and the other currency crosses? Well, I'll tell you what it means. It means not a dollar strength over the past few days, especially going into this unemployment number with follow through to the downside. Remember, they're in a bear trend. According to the employment number and a couple other numbers that have come out over the course of the rest of the week prior, the Fed is definitely more likely to raise 3/4 of a point than they were probably, say, a week or two ago, when there was some speculation that maybe that they would only raise a 1/2 point. I think that it's very, very likely that as far as total rate cuts, or rate raises, excuse me, if you will, the 3/4 point is probably very much on the table for the next one, and maybe even the following one. They're behind the curve. We've talked about this in plenty of our videos, but right now I think that that's really the stance you have to take. And if that's the case, most likely the interest rate quadrant will continue to trend lower, and as that happens, it will help to give strength to the dollar. Not that the dollar is strong, but this is one variable that helps to give it a lift. There's also a bounce in crude. We'll get to that when we get to some other markets that are influenced by that. So let's look at the euro right now. So let's just say that we actually took a bottom today. For you aggressive bulls out there, you want to have some sort of target, don't you? How many of you want a target out there? Someone put it on the chat, please. Let me know. Let me know. So, yeah, don't forget to make sure that you are passing on our stream as well. Hit that Twitter and like and share it out there to the public, if you will. So, all right. And oh, there we go. Thank you for that like out there. We appreciate all the likes we get. It helps with our the algos. All right, so we have our little Fibonacci here. We'll take that last major swing high down to this new major swing low of today, and let's just say that we set a short-term bottom today. Remember, you don't want to ever try and pick a top or a bottom, but for you aggressive bulls out there, if you want to risk the low of today, which I would make sure that you are being very careful being long below the low of today. The odds are really, really strong that not only are we going to get below parity, but we could see the euro in an area where it hasn't been in 20 years, basically. So for us to get down to 95, 94 even in the euro US dollar, now I'm not calling for that overnight, over the next couple of weeks, but definitely over the next few months into the next 6 to 8 months, it is a very rational target. With the volatility we have, it's more likely we'll hit it by probably October or November. But if you want to have a nice long-term downtrend that's sustained, that starts to maybe stabilize to some degree, we'll see what the ECB does as far as their own actions. For transparency's sake, right now, actually, today I am short the euro US dollar. Obviously, it is going against me right now, so I have a stop in, where is it? It's higher than the high of the day today. It's a little bit above the high of yesterday, and I'm looking for another sell-off. And one of the main reasons being is because of the fact that the interest rate quadrant is really pushing new lows. We had that sell signal that confirmed, you know, that the bonds are and the interest rates are looking to fall back under pressure. And there's a couple other fundamentals and technicals that go with this. Remember, we're coming off a lower move low today. If we do have a rally, I would view it as a corrective rally, and I really doubt that we will be able to get much further than where this new corrective zone is. Look at the trend. The trend is still intact, whether it's this shorter term trend or even this longer term trend right here. So coming into this corrective area around 103.41 to 103.98, most likely is going to cap any type of upside market action. Not that it couldn't spike above that, but right now, as long as oil is starting to not only just stabilize but start to rally, and as long as interest rates are going back up, meaning price going down, that's most likely going to lay a lot of pressure on the euro US dollar, because it's going to lend strength to the dollar and the euro right now, especially since their economies across all the countries in Europe, they're just in shambles, in complete shambles, and they're falling apart at the seams. So I don't see any real true reason why we would get any type of real strong rally against the dollar in the short run right now. We'll see what happens as we move forward towards the end of the month into the July Fed meeting, and see how much they do or do not raise the interest rates, which once again, I think I was leaning that maybe they would do a half a point on this one just to see how things are going and stable, and just not be pushing the envelope like they are. However, because of the unemployment number and a couple other things that are now coming into as far as economic data, I would say that you're 100% is something I would never say, but I would believe that you're probably in the upper 90% chance of having a 3/4 rate hike in towards the end of the month. All right, so that's very good as far as we have an upside and a downside scenario. Now let's just say that we take out the low sometime either Sunday, Monday, Tuesday, Wednesday, something next week. Where are we going with this one? Well, like I said, I don't think we're going down to 95 right away. However, once we fall below this area here, we're hanging on parity. So I think that you will probably spike below parity and have a lot of market action kind of starting to look like today is, where as we start to spike these lows, we're going to have these extended legs that come down as the algos really push to support and blow out a lot of the weak longs. And then as that happens, we'll have a nice little bounce. You're not going to see the body of the trading for most days. I think it's going to be more towards the upper half of the range, even though it's descending, and making lower move lows and lower move highs. As it hits parity, I think you're going to chop around there for a little bit. I doubt that you're just going to blow through it, but I mean, anything can happen. If we do have a continuation of these other trends where the dollar really starts to gain a lot of strength, well, that alters the scenario, in which case then the euro US dollar probably has a really good chance of getting down to that, I would say, 98 to 97 half area, and that would be within the next couple of weeks. That wouldn't be something that's going to be a few months from now. So now when it gets to these areas, I want you to make sure you remember something. Sell rally forecast remains, okay? You do not try and pick a bottom with this market. There's a lot of news that when it comes to shaking up the Forex markets, it's not just that it's shaking up the Forex markets, it's shaking up these economies of these countries. So it's going to be very hard to digest a lot of this information, especially because the strain on the EU is, because of Brexit now, is becoming more and more relevant. If the UK was still part of the EU, they would have another backbone where, especially with this energy dependency problem, they would have a little more relief. Since the UK is not part of the EU and they cannot control the UK because they have regained their sovereignty, I believe that that's going to have, you're going to have a little bit of divergence. So as the euro is pressing new lows, I think the pound as well is going to be weak versus the dollar, but not quite as extreme. So as we're really banging towards parity, and I think we will develop a sustained trade below parity. So that's why I'm saying be very cautious buying into this market. If anything, take profit out of shorts and then look to scale back higher later. And once again, I'm not telling you to get short, but I'm telling you, as far as right now, the trend is your friend, and the pressure is so severe that being a bull right now is really, you're taking a counter trend trade, which is always the riskiest type of trade to take, or one of the riskiest, excuse me, and you just need to be mindful of that. So if anybody has any questions about how to trade that and what I'm talking about, please don't feel like you can't ask a question. So on Discord here, ask a question. Nobody is out there on Discord. We don't have many followers on that yet, even though we had so many people that said get on it. All right, we do have a question here on YouTube. All right, we love it. We love it. All right, so Anurag, let's see. Sir, what was your analysis about XAU USD? Also, tell me what indicators you use for the day-to-day intraday tradings. I am from India. Please count my fullest support. Oh, thank you very much for your support. We appreciate your comments. And we got a couple questions here, and we're going to take a look at the XAU USD for our first chatter on YouTube today. So, all right, so let's take a look at the XAU USD. All right, so this is a very good question. The bear market in gold right now, a lot of people are saying, how is this possible right now? Well, it's very understandable how it's very possible right now. You have gold holdings in both dollars and also multiple other currencies. And this is really good that you brought this up, because as Forex traders, you got to be mindful of these other markets. As long as gold is under pressure, that's usually good for the dollar. So besides, remember when I told you that we have the interest rates, that because rates are going higher, that lifts the US dollar and makes it stronger versus relatively most currencies, depending on the obviously central bank relationships as far as who's raising and who's not raising rates. But when the US dollar is strong, and especially the stock market is weak, the gold market tends to be weak as well. So that also means that you have a stronger US dollar yen. So there's usually, and this is a really good question, for especially, I know you're in India, I know gold is something that there's a lot of people from India invest in gold, not just as a hedge against inflation, it's just something that they do. They also have a lot of jewelry, it's traditional and what have you. So the cost of gold and where it's going, I'm sure, is very, very important to many people in that region of the world. So great question to bring up. So right now, is gold bottoming? No, gold's right now in a downtrend. Okay, you're making significantly lower move lows and lower move highs. Do I think gold has a chance at rallying? Absolutely, I do. When is it going to happen? I think the biggest thing you need is for the dollar to turn. So right now, you'll notice that the dollar index, and this is something you can see blatantly right now live. Okay, so the XAU, the gold we're showing you is live. This is in a delay. But look at this, is trending higher. Higher move highs, higher move lows. And take a look at this. So we basically bottomed this last time right around June 27th. Okay, XAU USD. June 27th. What happened on June 27th? Okay, it's June 27th. That market bottomed. The trend here, this was going sideways. All of a sudden, it breaks out to the downside. Why is that? Because you had this huge surge in the dollar. So once again, as dollar strength comes in, gold weakness comes in, because that's where the flight to quality is. Now, as dollar weakness comes into play, then you will have a reversal. So another thing that's keeping gold under pressure right now is that, and this is funny too, for all you cryptocurrency traders out there, people are like, when cryptocurrencies first came out, and I have a lot of people who are so gung-ho on cryptos even still, it's not a hedge for inflation. We can see that now. If the biggest test of whether Bitcoin and other cryptocurrencies would be a hedge against inflation is going on right now. We've never had this type of inflation in our lifetimes, that's for sure. It has happened before in history, but nothing like what's going on right now in our lifetimes. So, and that shows you that and that's another reason, as cryptocurrencies crash, there's also people bailing on it for other currencies. A lot of it is the dollar, so that gives strength to the dollar, weakness to cryptos, weakness to gold, weakness to the equity markets. Today, unemployment number came out basically flat. Don't believe it. It's not true. We have still over 11 million unfilled jobs. These people are just not on unemployment. Our unemployment rate in the United States is not 3.6%. It's probably like 7-8% at least. So, and there's always a margin of error on unemployment of 1 to 3% historically. So, even if I am wrong as far as where it's at, it's zero, that's for sure, and it's more likely headed up towards 6%. So that's a good question that we got there. Anurag, sorry, I don't have my glasses on. It's not that I'm mispronouncing your name on purpose here or anything, but because of the video here and the lighting, I have to keep my glasses off, so I'm doing a little focusing here. So, but yeah, great question about the gold, and this is a great lead up to going into the British pound, US dollar. So yeah, we really appreciate any type of questions like that. I'm sure that it helps out some other people that are viewing our show. And here's something I'm going to offer to you guys. Let me just put out, let's see, I got to do this real quick. All right. There's another little question. I'm just trying to read this out about the dollar index. Yeah, dollar index once again is definitely a great reason for using that as a tool as far as an indicator, which gets back to our other question from our guest on YouTube. What type of indicators do I use and for trading day intraday techniques? Very good question about that one. When it comes to what people say is day trading, if you will, I am a trader. I'm not a day trader. Day traders come and go. They are gamblers, and I have to tell you, when it comes to intraday trading, you can't fight the machines. And there are moments, and I would say unless you have a lot of experience, are very capitalized and very disciplined, you should not be trading intraday. Maybe on the hourly basis at tops. Anything smaller than that, you're going to most likely burn out and lose money over time. It's not that it's a totally impossible task, but virtually it is. There's a lot of reasons for it. The main reason is because of, unless you have a very low latency feed for data coming in and going out, direct exchange market access, and a bunch of other things that it doesn't give you an edge, but it definitely saves you the time and puts you into real time. So that's something that when it comes to day trading, like I know people do it on the 5-minute charts and 15-minute charts, well, and some even on the 1-minute charts, which is crazy. You're never going to get, on average, the right reward to risk ratio. So that's a mathematical thing. So it has nothing to do with your trading ability. However, your ability to put on trades that are more, well, 2 to 1 would be the very minimalist you would take. In 2 to 1, if you have a 2 to 1 reward to risk ratio, you have to be profitable 7 to 8 out of 10 times in order to make money. That's where you have to be. So the real reward to risk ratio that you need to look for is more of like a 3 to 5 to 1. So that's why currencies are great, because of their trending abilities. You don't get that during intraday moments. You have a lot of noise, and you're risking more like 3 to 5 to 1, meaning that you're going to risk 5 to make 1. You're going to risk 3 to make 1. So if you're risking 3 to 5 to make 1, well, then you have to write almost 9.5% of the time, 9.5 times out of 10, just to break even. Okay, so as far as that goes, in intraday scalping and trading like that, I don't do it. I stress against doing it. You can't fight the machines. That's a whole day we could spend on a topic on why not to do that. As far as indicators, for what I use as far as during the day or whatever time frame it is, I use a lot of very basic ones, moving averages. I use Fibonacci for support and resistance and price projections. I use Gann mathematics and angles as well. That's a little bit of complicated stuff that I don't really get too much into. That's the kind of thing like we should do a webinar on just Gann alone. But I do use the 50% rule from Gann and the 45-degree angle, which coincides a lot with Fibonacci and a bunch of other very useful trading adages that have been successful over the years. So this is a really good question as we get into these other currencies and we start to talk about it. Like, you see that I don't have all kinds of indicators up on this chart. Well, if I did, it would be very hard for me to broadcast this and for you to see clearly what's going on here. I can have all kinds of lines going through here and whatever, but then it becomes information overload. The reality is most indicators come up with basically the same numbers to a large degree, depending on how you look at it. And another thing is, as far as indicators, they're all lagging. What I do use as far as real true indicators, and I've been saying this since I've been in the trading environment and learned this from someone a long time ago, the best indicators of the market is the markets itself. So the correlations, like we were talking about, interest rates, gold, all these things are interrelated. Even if you're just a Forex trader, a lot of times I have new viewers that are like, you spend all this time on interest rates and this and this and that. I'm like, well, that's your indicator. The trend is always your friend. If you want to know what's driving your trend in a Forex market, look at the correlated markets and how they're trending. If they continue to trend in one way while you're trending in another way, the trends are intact. When they start to break trend, good chances the Forex markets are going to break trend as well, or a certain particular pair, if you will, in the Forex markets. So it's up to you to figure out like which pair you really like. I always stress the majors. Depending on where you are in the world, you're going to be focusing on the yen, the Aussie, the euro, the pound, whatever. But when you do get into the more exotic pairs, be mindful of the spread between the bid and the ask, getting in and out of trades. It's very important because that also is indicative of how much money you will make. Because if you're giving up a lot of money getting into every trade and out of every trade, that eats away from your winners. And that once again gets back to why you have to have at least a minimum of 3, upwards of 5 reward to risk ratio for any trade you take on. And we'll discuss that because we've had a couple trade ideas that we can get into. So yeah, fantastic question on YouTube, and thank you again for the likes and the shares there, and the question, Anurag. If you're still there, if you got any more questions about what I just said, or if it confused anything, you just chime in on the chat, and we'll make sure that you got it. Okay? So yeah, gold right now, it's a bear. Don't try and catch a falling knife. I would expect any bullish sign right now to be a sell rally forecast, and just be very careful of that one, especially as the U.S. stock market and equities are under pressure, cryptocurrencies are under pressure, so is the gold, and the dollar, as long as it's strong and buffering highs with the dollar index, very, very hard to sell off in gold. But as soon as we get a nice little turn in the dollar, which we will, and guess what? When the dollar really turns, gold's going to skyrocket. It's been my prediction for a while. I was asked the same question the other day on one of my where I get interviewed for a financial show. They focus on a lot of gold traders, and I told them, like, it's not that the dollar is so strong; it's that all these other currencies are so weak. There's a couple things that, as they start to resolve or just kind of numb out, the dollar is going to run out of gas eventually. And when it does, when the dollar turns, I mean, just think about the levels that the dollar is at. A 10% correction in the dollar. Well, what's that going to do to gold and all these other currencies? Well, that's a 10% correction in these other currencies against the dollar, which, once again, if the dollar turns 10%, gold, you're looking at at least $170 to $200 rally. You can make some money with that. All right, yeah, I am here. Oh, okay, Anurag, so I'm glad you're still here. Glad you got a lot out of that, and hopefully I gave you some insight into the gold market that can help you look at it in a new way, or add to your perspective of it and see how it works. And yeah, let's continue the conversation as we move forward in different videos, or even today. So all right, so British pound, US dollar here. We have what is a very critical support line that we had taken out over the past few sessions. So as you can see, we had bounced off this lower move low, made a lower move high. This now becomes a very critical area. One, it's a last major swing high, a little lower swing high, excuse me. We have this downward sloping resistance here that it cuts across this, so where the market's channeling. Odds are the steepness of this original slide is starting to wane, because over the past couple weeks, it's actually started to get kind of neutral. It's probing new lows, but not severely. Now, once again, unlike the euro, which as it probes lows, it's trending lower in a big way, the pound, I think, is going to level off. So, for instance, here, even if we were to take out this last swing low from 2 sessions ago, I think we're going to go down like this. Like we took this one here, we had a low of $1.1933, and then we got here down to $1.1875. You're looking at a 60 pip slide. That's not even a full dollar. So as we probe new lows at $1.1872, I think maybe we get down to $1.18, maybe $1.17 half tops. Not that we couldn't have a very large sell-off in the pound US dollar. But the pound, unlike the euro, remember, the UK is energy efficient. They drill oil. They have all the oil they need, that's for sure, and gas and what have you, and they sell it. And so that trade there, that fundamental between the pound and the dollar, that's pretty neutral as far as the oil trade. The interest rate trade, though, however, that's a different story. That's helping to give strength to the dollar versus the pound. However, the Bank of England is starting to talk about raising rates. The question is, their vernacular is not as aggressive as ours. They've already started to take things off the table that were supporting the rate cuts and the quantitative easing. in their various markets, both in the UK and in the EU. And that pressure of buying is starting to wane. As that wanes, that definitely makes a more neutral trade between the pound and the euro, or the pound and the US dollar, because the euro, excuse me, the ECB is not quite on page or willing to even remotely go at the pace that the U.S. Fed is going, or other central banks around the world. So that's something you really need to pay attention to. I would say that the odds are very likely that we will see some sort of hiking on behalf of the UK. Streamlining, maybe they're not going to be doing like 3/4 points like we've been doing aggressively, but I can see a 1/4 point to even a 1/2 point every once in a while at a pace that's like spread out more over a couple of months than consecutive months. So that will lessen the blow as far as what we're talking about when it comes to the trend with which one's more severe. So the dollar index, which is got, the euro is one of the biggest component. The pound is the third largest, or second largest. Its influence on that bullishness in the dollar index isn't as strong. And that's another thing too, is as we get, for instance, a correction in the pound that may develop, especially with their banks doing things. One of the things, what will turn the dollar will be a central bank war, basically. In which case, the dollar index will reverse because of the difference on most of the major currencies against the dollar, and then we'll see what happens with some of the smaller ones. I would bank on the fact that these major trends with the dollar being strong against most currencies is going to come to an end soon. We're going to start to see some divergence. As we have this divergence, that divergence will start to set us up for a tone where dollar itself starts to become weak, and gold, for instance, will start to rally. The stock market, whether or not that's going to get a boost, yeah, it's a real tough one on that one. I would doubt it. The stock market itself, the economies of scales are so big that some will rally, some will not. I think the NASDAQ has a better chance at holding its weight up than the S&Ps and the Dow. Real companies are in a lot of trouble, and especially if the EU is in as much trouble as it seems like they are in, that's going to have a ripple effect into our markets, especially as we head into the fourth quarter of this year and then into the first half of next year, which is going to set us up for some fantastic swings. So we know where our bearish level is here. It's the low that was set 2 sessions ago. Anything below here, $1.1660 is the real stretched extreme. And that's if we have like a sell-off like we had from this last swing high to the low. But we're not coming from those levels. If we do, we're now coming from a lower move high. It's not that extreme of an upside correction. I don't think we're going to have that big of a sell-off initially. Once again, I think that 118 even to 117.5 is going to be a little bit of an area to hold things. Now, for compliance sake, just to let you know, I am short the British pound US dollar right now. I am fading this corrective move higher. I'm not encouraging anyone to sell anything or buy anything. The trade's already on, so I'm working that. The stop is a little bit higher than where it's at, than the high of the day today. I mean, it most likely I'm not going to hang on to most of this position. I'll probably lay off of a lot of it this afternoon, unless we have a big reversal of fortune and we go back to the lows. Anything can happen. So what upside correction, we have to pierce this $1.2403 area just to have us going up into this 125.04 up to 126.45. The only thing I could see that would do that would be if, for instance, like we have the bonds. Yeah, the bonds are even lower now. They're at 137. So 137, this is another thing. They're getting closer to their corrective area. So they're under pressure. We would need a big, huge bond rally, and also a big rally in oil. Big rally in oil and a big bond rally in the U.S. would maybe give us a chance at getting back up into these levels. I think it's a sell rally forecast where the trend is your friend, my friends. We're still making lower move lows and lower move highs. Look to sell into strength right now. I mean, we did have a short-term buy signal yesterday, but it's a counter-trend trade, and in this environment, it's really hard to take counter-trend trades. This low that was set 2 sessions ago, yesterday, we had a bullish engulfing line. Normally I would be buying this market, but right now I'm selling this market because it's a counter trend trade. There's so many fundamentals against it that I just don't have faith in this buy signal. I think if anything, this buy signal is nothing more than something that sets it up to correct. Which if it this is, and I think no matter what, the trend is your friend. You got to rely on that. If this buy signal here does follow through to the upside, this is the area I see it going up into. And as you can see, the downward sloping resistance, if it came up into this area, it's where we're channeling to begin with. I would think that most likely we're going to fall off of this area and then come back down. Anything can obviously happen. The market could be already setting a bottom. Remember, we do not try and pick bottoms and tops. You will blow out your account. You'll grind through so much of your capital. There's no reason to even try and do it. Oh, you're welcome. That's great. I really appreciate your thank you also as well. Thank you. So I can learn from you. Absolutely. If you're learning something, guess what? I learn from you guys too. When you guys have these questions, I know exactly what you guys want to hear about, what you're interested in, what you're trading, and what parts of these webinars the insight is going to you. I want to keep flowing the information that's paying off for you guys and being beneficial for you. Excuse me, as well. All right, pound US dollar. We got the numbers on that one. So, like I said, today the dollar was very strong against it. Now the pound bounced. I would use caution. Remember, it's Unemployment Friday. We're going into a long weekend. We're coming off of a holiday week. Big economic numbers. Remember, European markets now are closed. Asian markets are closed. Be careful of the lunchtime trade right now. I think that you're going to see a lot of sideways choppiness action. I wouldn't expect much to happen. Come around 1:30 to 2 o'clock as the interest rate market closes. And then there's the Forex market and just the U.S. market open. But they're going to have low liquidity or volume in the Forex markets because they're winding down just like it's a Friday in the U.S. stock market, unless it's really pounding new lows or new highs going into that part of the session. I think it's going to be a quiet trade. But come 2 o'clock, 2:15, if we are going to spark a move, it's going to happen around between 2 o'clock and 3 o'clock most likely. And then if it does and we get dollar strength that comes in, I would say that you will probably see the pound US dollar and the euro US dollar maybe not get back to their lows of the day, but start to come back halfway and start to lean on support once again. Anything can happen. I'm not telling you to get long the dollar and short these other pairs by any means. You got to wait for a signal and have a plan and the strategy in place. I just believe that as far as the tone of the volume that's flowing today, this is what we're going to see over the course of the next few hours. All right, let's take a look at the US dollar Swiss. For transparency's sake, I'm long this one. You guys know that from the prior videos. We have came into our upside correction zone today. So, and by the way, for those of you that some of you see me on, some of you watch me on TFNN every once in a while. You know that on Wednesdays I do an interview with Tommy O'Brien, and sometimes I do some webinars, and I'm on there on some other spots every once in a while. But for all of you that are watching right now, I am going to put something special out on the chat on YouTube and Twitch for you. We have the Tiger Forex report, which just was launched a few weeks ago. And something that we are doing that we haven't done is we are going to have, we're going to keep a sale going on for the rest of the month. The sale is that you get 25% off of the subscription price for the life of your subscription. So as long as you maintain a subscription, you will keep that price indefinitely. If you ever cancel for any reason for a month or whatever, then you will be paying full price if you come back for whatever reason. So also, there's a 30-day money-back guarantee. So you get to use it for a month, test it out, see what kind of analysis we do, which obviously, if you watch my videos, you know exactly what it is, except you get more. You get it ahead of time before as the week is starting. Things that I don't put on the videos are in the letter, and also very descriptive tone as far as when trade signals come on, what levels to worry about for risk and targets and things like that. Check it out, show it to your friends, and let us know what you think of it. All right, so that's a little bonus for you guys. It's a 25% discount on a 30-day money-back guarantee product. Just that's for you guys. All right, so now U.S. dollar Swiss. Let's see what's going on here. So we hit our upside correction zone. So we talked about this in the newsletter. I think that if you are one of the bears out there for the U.S. dollar Swiss, or think that it's going to maintain a rather neutral posture, that we've come into this area of 97.71 up to 98.39. This should cap any rally right now, and we should go sideways to lower if the bearish trend is to emerge. Not that it can't emerge somewhere else. Anything can happen. However, right now, with the way things are moving, that seems where it would be. If the dollar is strong and if this interest rate move continues and oil especially continues to rally, I think that you will breach this 98.39 area, and then fresh buying is likely to occur. How much? I think it's going to accelerate things a lot. You have a New Zealand dollar, US dollar. Yes, we're going to get to New Zealand dollar, US dollar in just a little bit. Cool. Yeah, we got someone who's interested in that. We're making our way around the world. We're going to get to the Asian markets in just a moment. Fresh buying above 98.39 I think is very likely. Parity for the euro and the US, the euro and the Swiss, I think parity no matter what right now is a goal. And then being above parity for the US dollar Swiss and below parity for the euro US dollar, I think is going to be something that the longer term trend will solidify and prove us to be right as far as maintaining the strength in the dollar. Now, once we get into those levels, then I think we may be setting up for a short-term dollar turn. But first, right now, I think we are going to push these trends, keep on doing that. If this is correct, and we do have a nice surge of fresh buying above 98.39, it's not hard to get up to parity in this critical resistance area about parity 04. If we get above that, we made the one-time, two-time, this will be 3 times a charm. Let's go up to higher levels. 102.10 is the longer-term upside target, which is a nice little thing to shoot for, considering we're trading right now at 97.80. I'm long, and I'm looking forward to seeing parity and above. I'll be pecking away probably this weekend if we don't get a dollar rally boost going into the close of the currency markets. I'll probably take a little profit off just for to lay off the risk from the weekend. But for transparency's sake, I am long to U.S. dollar Swiss. I have been also for the past week if you watch our videos. So that's our upside potential. As far as correction to the downside, the last swing low here is pretty critical here. Only below there do we get bearish targeting 92.44. I don't find that as a very likely scenario in the short run. We would have to have some major turn of events. One being the Fed's going to stop raising rates in the U.S. Not happening. Oil would have to get back down to say like $75 to $70 a barrel. Not very likely of happening. So without those things happening, the Swiss is no longer a flight to quality currency. It used to be. So you can't look at any type of global strife as people running to the Swiss, and especially with what happened due to the sanctions on Russia from the Russian-Ukrainian conflict. Switzerland has broken their neutrality. So that's one of the biggest reasons why I think that weakness will prevail in the Swiss, and you'll see both those two European currencies heading towards parity. The pound, I don't think that's going to parity anytime soon. Not that it couldn't eventually go to parity, but like I said, there's a lot of reasons that the UK, not that they're strong, but they are in a better position. All right, so normally we go to the yen first, but because we have our happy chatter here from India, and we know that they're up much later than we are, we're going to put on the New Zealand dollar, US dollar. This is for you here, Anurag. So here, let's see what he says. I have an open position of New Zealand dollar. Your entry is 63.62. So let's see. He's at 63. Oh, you're up here. Okay, so you've been long for a while. Okay, so here at 60, 63, let's see. I have the open position and take profit at 63.64. Well, 63.62, that's way up in this area here. So are you looking at New Zealand dollar, US dollar? Yeah, that's what you're looking at. And take profit point is, as of June 20th, you're looking for it to go up there. 63.64. Okay. From where it's at right now, it's going up to 63.64. Let's see, 63.74, 65. Let's just make this a 64. All right, so for all of you that are joining us on this question here, we have our friend from India, that this orange line here, this is right on the basically last swing high. That's gonna be a good target area because it's very likely to get up there. If it gets through that, I would assume that most likely you're going to have a failure. So if you're bullish right now and you're looking for a rally up to there, that is a very good reward to risk ratio if you're risking these lows, which I would say that you would want to risk probably down just a few pips below the last swing low, somewhere around 61.14. Now be mindful, you have this downward sloping resistance line that's coming in, Anurag. This is keeping the trend intact. You're making lower move lows and lower move highs. So your trade right now, you're long, you have a counter trend trade on. So we could get a nice correction up into this area. To do so, we would be taking out the current channel trend line, and simultaneously we would be flirting with a higher move high after a lower move low. That would not necessarily mean that it's going to continue to be bullish, so your target is a very good target price. Odds are, should it spike above that level, it will pull back for a little bit and have a little bit of consolidation, just because you would be having a lower move low than a higher move high. The market needs to digest and figure out, will it make a higher move low or will it go to make a lower move high? What kind of sequence will it get into now? Is it changing trend? Is it going neutral? I would use caution though. Do not fight this slide. One of the biggest problems with this trade being long is, like, this isn't a sell rally forecast. I would look more to sell up in this area than to buy into here. It is a low risk buy down at these levels if you're looking for the reward to risk trade. Here's the one problem: the fundamentals. As long as the interest rate factor is weighing more on the U.S. versus New Zealand right now, which it is, that's helping to drive the bearish trend. Then you have the lockdown measures in New Zealand. The COVID stuff is still a big thing on their plate. And as far as restrictions, they have their economy is collapsing. Their debt level has skyrocketed over the past 12 to 18 months. They've literally, just like Australia, more than doubled their debt. We've done we've put a big chunk into the U.S. economy too, as far as our debt, but we can absorb things much better because we're a much bigger economy. And we also have more going for us as far as economies of scale. I'd be very cautious with this trade. Okay, so your lot size is, you got a half a contract on. Okay, so you're not risking that. Well, I don't know how much you trade as far as what your other markets you trade and what your total volume of your capital you're using on this trade. So, but if you're long right now, you do have a good upside potential. My thing is, once again, I think that this is a little far-reaching. What I would look for more is this: you use the last swing high down to this recent swing low. If we go from here and we go to the 50% and the 0.618, this I think is a much more rational area, especially because this comes right into where the downward sloping channel line is. If we breach this, that's very positive for you, Anurag. Okay, if we can get through this area here, well, then it's very likely we will be challenging this and hitting your target of 63.64, or excuse me, of 64. You want 63.64, not 64 even. My bad. There we go. All right, so you're in the heart right there. So yes, from here to there, still very reachable. I'm not trying to tell you to get out of your trade, and definitely not. I wouldn't short it where it's at. I would look to sell rallies. Does look like the way the market's been trading the past few sessions that it's trying to make a turn for a correction. I would just be mindful of this area here. When you get up to here, keep your stops tight and be mindful of the recent lows, because if we fall off of this and come back this way, it's more likely that we're going to pound these lows, and then the 63, 64 level, we're not coming back to that for a while. Remember, the overall trend is down until we have some reason to think that it's going to stabilize neutral, which there isn't fundamentally or geopolitically. I believe you're going to be under pressure. So, and now we would need a big dollar sell-off to help give a rally here. So you would have to see a rally in the Australian dollar, the euro, the pound. All these currencies would have to be going in a corrective move to help give lift to the New Zealand dollar. But great question. Now let's go to the U.S. dollar JPY, and I'll double check on Discord real quick and also on Twitch. Okay, no questions there. On Twitch, no questions there. Yeah, if you got any questions, guys, don't feel hesitant. Just join right in on Twitch or on YouTube and give us a little shout out with a question. Thanks. We got a couple more likes on YouTube. Got some more people watching. I know it's a Friday, so a lot of people are winding down their time, and they're got other things done, especially if you're in the foreign market. So that's why we really appreciate you, our friend from India here, Anurag. It's late at night where you're at. You're obviously checking out how the week is going and winding down. All right, so what is going on with the U.S. dollar yen here? There's a lot going on, I'll tell you that. So I got to make this a little tight here so you can see. We have a potential head and shoulders pattern that's forming. Now, for those of you who aren't familiar with a head and shoulders is a type of sell pattern. It's very reliable. It's been used for a long time in multiple markets across countries around the world for a well over 100 years, depending on where you're at. Actually, 150 years or more in many other areas. So, does it always work? No. Just like no signal always does. Is it very reliable? Absolutely, at least in the short run. And to complement it, you see we had this higher move high here, which becomes a shoulder. Then it broke down here. Then it rallied up again. So this becomes the head, okay? Then it fell back down here. It made a higher move low. Then it rallied for a couple of days, and originally it was rallying a couple sessions here. Came back, made a higher move low. Boom, today it made a higher move high. This is pretty significant because we're almost at the high level of the head. If we take out this 137.03 area, well, the head and shoulder pattern is over. It's not existing. We have to look for a fresh one. If this sell signal that we had here the other day, and we only had a 2-day sell-off, did not reach our downside corrective area. We're looking for it to come down here from this sell signal. If we take out this, see this rising support line from these last two major higher move lows, this is our neckline. If we fall below this neckline, it's very likely that this head and shoulders pattern will be confirmed, and that will set off a short-term trend lower. Does it mean the market's going to trend very, very much lower? Well, we're in a very big bullish trend. So our first corrective area is 134.35 to 133.63. This is our initial short-term correction from our sell signal from the head. We are still below the last higher swing high. This short-term trade is still on. We're looking for it to come down to this area. Obviously, if the high gets taken out, the signal is over. The signal fails. It did not make it to the target zone. It fell short of it. If the head and shoulders is triggered, well, then that confirms this sell signal even more. The head and shoulders will put us down into this corrective zone, and that'll be pretty much the line in the sand for the aggressive short-term bears. Longer-term bears, you got to use caution. Main reason being is that you have the U.S. dollar strength, oil is bouncing again, and also the interest rate factor. Now, the Bank of Japan set a target of 130 here. This was our target level. At this point, they were going to do something to defend their currency. Well, instead of defending their currency at 130, they ended up getting into a tug of war between the Finance Ministry of Japan and the Bank of Japan. The Bank of Japan is not going to raise interest rates, and they're buying up. In fact, not only they're not raising interest rates, they're buying up everything in sight as far as their debt paper. They're keeping it locked at 0.25%. So that's big because we already know that they're locked at 1/4. The U.S. Fed has already done a 3/4 rate hike before, and now a 0.5 point to 3/4 is very likely on the table for a couple weeks from now. That's going to make it hard to sell. So even if we do sell off into this area, coming back to this critical support level here would be the spot that we would be targeting with this head and shoulders. The fundamentals are really not there for it. That's why I don't even know if this is going to happen. Today's strength, if we were going to sell off, today would have been a very, very good day to do it. One of the main reasons being is that all the other currencies were weak against the dollar, and they came back. I mean, right now we have the euro US dollar is slightly positive against the dollar. We have the British pound US dollar, which that is slightly positive against the dollar. We have other markets that we've looked at, like right now we have the New Zealand dollar, that's positive. We're going to get to the Aussie in just a minute. It's a mixed bag of goods, but the amount of positivity that we have going on with these other markets isn't very much. It's only slightly positive on the day. So I think that if those markets do turn, especially at the 2 o'clock mark, which we were talking about earlier, then I would expect that the U.S. dollar yen is probably going to make a run for the highs of the day. If this was to fall apart and collapse, especially if we take out this neckline, look out below, guys. I mean, I would use caution buying into this break. And if you're long, keep your stops tight. I do. I've been long this market for a long time, and I'm long again on this one, and I have my stops really tight for the rest of the day. Just because if this thing snaps, it's going. I think you'll have a short-term correction. I'm not maintaining a long position up there. Let's see. We got another thing. Yes, keep it under the constant watch, and I'll try to get as much needs to you. Oh, there you go. Cool, I will. And I know, I always, when we're going through the Forex markets, I talk about the New Zealand. So, and I will mention this as I go through the next couple of videos over the next week, just for you, in case you're not live when I'm broadcasting, when you watch it in the recorded version, because that's on YouTube. I assume you watch our YouTube channel. Hopefully you've subscribed to it already, and anyone out there, if you're watching, please hit that subscribe button and that like button. And don't forget to leave comments in the comment section as well. So, but yeah, I will be watching New Zealand dollar, thinking of you, and we'll figure out if we can get it up to that one little area, or watch the correction that we have going on. US dollar yen, once again, we found that area. Now, if we take out the high of 137.03, 140.25 becomes our upside target. Now, does that mean that we're going to fly through that resistance area and shoot up to 140.25? Probably not. I really don't see that. We would have to have a severe turn to the upside in crude oil. If we get crude oil back above 110 to 115 bucks a barrel, well then, yes sirree, I can see us going to 140.25 very quickly. But I think that oil right now it's been basing. It's starting to slowly creep higher. Rates are getting going higher, meaning prices going down as well. If that stays in a constant trend and a nice pace, I think we're just going to inch higher. So we'll get above that 137.03, shoot up to maybe 138, 138.5, kind of bobble around, test support, constantly keep flushing out all the weak longs, and then, push up to 140. Remember, the Bank of Japan is supposed to do something. They haven't done anything. Until they do, and this tug of war remains, I have to say, these trends are intact. I got the yen going as high as 150 to 155 before the year is out. I didn't think we would be trading at the level it is right now. Literally, I thought that we would get to where it's at right now at the end of the summer, not where we're at right now. So we're ahead of schedule, at least on my longer term projections. Volatility is that strong, dollar strength, and now this is something you also have to take into account. Dollar strength is so strong, markets go out like they come in. When these things snap, we should expect a very nice correction. I would say a 10% correction in the dollar is very, very, very likely to be on the table. And that's not like being any major call there. So I'm not really stepping out on a limb on that one. All right. So we have the US dollar JPY. Now let's go to the Australian dollar US dollar before we get to the Canada, and then we're going to get to some cryptocurrencies too for you guys. I know a lot of you guys trade the cryptocurrencies. So, especially since we're going into the weekend, if you have any questions about any cryptos, put the symbol up and we will talk about it. All right, so Australian dollar, US dollar, it is bottoming just like the New Zealand dollar. This one has a little bit better chance of maintaining strength than the New Zealand dollar, but not much. They're pretty much in the same geopolitical situation, but they have more resources. They're a much bigger country. Excuse me, talking so much here, just got to keep my throat a little moist there. They also have, they supply a lot to China. So the question is how much is the demand from China going to grow over the next couple of months? If they seem to be leaning towards being just as strict on COVID and a bunch of new measures as New Zealand, if this really does hold, then I think that the trend is going to still continue to be bearish for the Australian dollar, US dollar. But I would use caution because I think that over the next couple of months, you may start to see a little bit of divergence where New Zealand is going to continue to pound new lows and maintain its trend lower. And then the Australian dollar, not necessarily it's going to get strong, but I think it's going to slow down in making its lows. Kind of like how the pound is weak versus the dollar for the European currencies, but not as weak as the Swiss or the euro. I think that the Australian dollar is not as weak against the dollar as much as the New Zealand dollar. It's kind of like where the pound is at. Also for a lot of the similar reasons as well. So now as far as downside, if we take out the low from a few sessions ago around 67, 63, I see us getting down to the 65.88 longer term downside target. It's not a crazy reach to get down there. That would be a good basing area for support to at least set up a range trade, maybe not necessarily a big corrective rally to the upside, but set a boundary for a floor and a ceiling where the market may bobble around for a couple of weeks and stabilize. To the upside right now, off of the low that we had from 2 days ago, we are targeting this 69.14 area up to 69.51. We are coming out of these two trend lines, downward sloping trend lines here. That's by attrition to begin with, not so much that it's the market's moving so much. So we can take these off the table, get rid of these. And if we get above 69.14, 69.51 I think is very reasonable to still stretch a correction. Anything above here, it starts to get a little troublesome. I think that the 70.73 around this last swing high, which is in between these two pivot points of 70.23 and 70.86, I don't see us getting this high. The only thing I could think of that would drive us up there would be let's see, oil is somewhat on the table here, would be a huge rally in oil, and then we would have to have a big rally in the interest rates. I just don't see that kind of scenario. The scenarios that it would take to propel that much extra buying pressure just does not seem to be around, you know. So I don't know if any of you guys are out there trading any Aussie crosses, like your input on that one, but I really think that that's really where we're at with that. What time am I on here? Local time, so you can join up for your guidance. You know what? Because of Unemployment Friday, we're doing this time slot. We're coming up with a schedule because we have people like you that are from around the world, and we want to keep the biggest viewership going. So we are looking towards trying to work with those time frames where it's more active for globally than just in the U.S. So today was an unscheduled time. We do it a lot of times. We do it in the evening U.S. time, so we wouldn't do it until later, around 8, 9 o'clock. But then we also do it sometimes very earlier than we're doing now. So right now it's Chicago time. It's 11:26. Figure 11:30. We usually do it more closer to around 7:30, 8 o'clock, sometimes 9, 9:30. So a couple hours beforehand. But we're going to start to post a schedule and start to get more of a format going with that, because we have, just like we have with TFNN, where I'm on every Wednesday. I do a lot of my webinars. I do over the course of the day on Wednesdays. So we're going to probably start setting up a guaranteed Wednesday slot of somewhere between 9 o'clock and noon. So it'll be right around this time when you're looking and reviewing right now. So, yeah, thank you very much for your interest. Great question. We are working on the format because it's summertime. That's one of the biggest problems. Like you noticed that I gave you the link out there for the new newsletter. Summertime launches is not the best time to launch a product because you have a lot of people, at least in the U.S., that are traveling, and also in Europe. They go on holiday in Europe we take vacations in the U.S. for 1 to 2 weeks. They take them for 1 to 2 months. This is not our normal time frame to really build up that kind of business. So it's kind of a soft launch. That's why we're giving the 25% discount. The 30-day guarantee, by the way, happens to any new customers whenever you sign up. So, but yeah, we're launching that product, and as we get that product launched, it's going to help us find out where our customer base is for where we're going to start broadcasting more. We're integrated with TFNN, and then also through Forex Trading Unlocked on YouTube and Twitch. And on Twitch, we will be posting the calendar, and also we will put it up on our YouTube channel. So if you haven't subscribed to our YouTube channel or our Twitch channel, please do so and check out those pages because we are constantly updating them. We're expanding the playlists on YouTube. We have, especially since we have this newsletter now, we are coming up with the live signal system also, and a couple other things that will maybe be of interest to a lot of you viewers out there. So, and also anything you are interested in, throw out some comments, and maybe it will be a new project or something we are working on, and give us more motivation to launch it. Eastern time zone? No, I am Central Standard Time. Very good question, Anurag. So anyone that's listening here, I am in Chicago. So on my time, I am 1 hour behind New York time. So they're Eastern Standard Time. We're Central Standard Time. So right now it is 11:30 a.m. in Chicago. So yeah, very good. Thanks. See, this is why we love you asking questions, because there's other people that want to know these things, and you know what? It's great motivation for us too, Anurag. I gotta have to tell the guys at TFNN or whatever. They've been busting my chops about the schedule. I'm like, they agree that it's. See, they have a big staff, and they have multiple segments that are not just on stocks or options or Forex or whatever. So I am a more focused Forex futures and stuff like that, and options. So, but yeah, we are building that schedule, and yeah. So right now, Anurag, yes, 10:30 Central Standard Time. That would be probably around the time on Wednesdays, especially, that we'll be broadcasting. Mondays is another day too. I don't know what days, what your work schedule is like, and what others are. But we are starting to look at a format of, it'll be, especially as we head into the fall, Monday, Wednesday, Friday mornings, where we'll probably have 2 broadcasts. One will be early morning when the markets open in the U.S. So before the interest rate products, so around 7 o'clock to 8 o'clock U.S. time or Central Standard Time. And then also have one around 10:30 to 11 o'clock, 11:30, which would be in this time space right now, also on Monday, Wednesdays, and Fridays. So that's in the works. We also have to have the crew to balance, because I can't just be pushing. I can handle the charts, and I can get us on the air, but there's a bunch of background stuff that, especially when it comes to a lot of questions in the chat, that I need help managing that. So, but yeah, fantastic. Glad for your interest on talking about that. Hope you guys are definitely interested in those formats and the schedule coming up soon. That's for sure. So yeah, a lot of good things. We're growing the channel, as our interest grows on YouTube and on Twitch. Our following has been growing. On LinkedIn now, we are the #1 organic company page for the Forex markets and the derivative space for Forex in the world, and #3 in total as far as ranked as any Forex business in the world. Soon to be #2. So yeah, we are very happy about that. You can check us out on LinkedIn. That is no nonsense. Forex Trading Unlocked. We are there. We have a lot of stuff that we don't just put out on our normal YouTube or on our email list and stuff, because that's a very professional channel. We're venue. We make sure that it's very catered to people who are serious about trading, so it's really good. Gary, good to have a scheduled time. Yes, absolutely. Gary, I haven't seen you since I think, what was it? Was it Wednesday? Yeah, I think Wednesday you were on there. So yeah, thanks for your input. Yeah, Gary, I know that time works for you because I like interacting with you and your questions. So yeah, that's sweet. All right, I like that you guys are chiming in. This is what I need. We need the feedback so we can lock in these schedules and the time frames. So yeah, very good. Really appreciate that. And anyone that watches this video, it's not live. If you watch it later on this weekend or next week, leave a comment about what times you think would be good for you or the people that you know in your groups that are trading Forex in the markets, derivatives markets, because we're trying to set it up where we have, like I said, like a Monday, Wednesday, Friday, as well as we're going to have some weekend pre-market webinars, which will be good for a lot of people because some people work other jobs or they combine trading with other things. So let's see. Only by chance I find you live. Yeah, I know, because it's summertime, Gary. Right now, one thing I don't do is try and waste people's time or my time. We've had a lot of days where we had a lot of indecision in the marketplace. There's no trade there. One of the biggest things that people need to do when they're trading is treat it as a business and maintain good money management. Staying away out of the market and away from the market when you don't need to be there and there's nothing going on. If there's no opportunity, go read a book, go ride a bike, go for a walk, go work out, go shopping, do whatever, but get away from the screens. There's more to life than just trading, that's for sure. But you want to be here when there's good news events and what have you, and when the opportunities are kicking. So let's see, sir, could you tell your time? I will coordinate as per your things. You could tell your time. I will coordinate. Yeah, like I said, we're going to be shooting for these time frames on Monday, Wednesdays, and Fridays. It's going to be around 9 o'clock Central Standard Time, on Mondays, it'll be around 7 to 9 o'clock. Wednesdays will be right after our show with TFNN, which is 8:40 Central Standard Time, or 9:40 Eastern Time. We'll finish that up by 9, so we'll be probably going live around between 9:30, 9 and 9:30, closer to 9:30, just in case we run long with their show. And then we'll be looking to have an 11:30 segment too. So we'll be doing basically a short segment where we kind of compress the market, see what's going on, because they're only in their first few hours in the U.S., and then come back before lunchtime where we can actually see how things have digested and stuff. So yeah, we'll be posting that on our YouTube channel, also on our LinkedIn page, and also on our Twitch channel as well. If you go on our Twitch channel and you go toggle towards the bottom, it has a bunch of stuff. It has a calendar. We've had it for different events up before. Once they're expired, obviously they're off the chart. So all right, let's see what we got going on here with the Aussie. We did that one. Now let's go to the US dollar Canada. You want to talk about a nightmare of a trade? This is one of them. I'll tell you what, if you've been watching our videos, you know this has been in the big sideways. Crazy how we blew up, and these holiday weeks too. This is why I warn people about holiday weeks. You got to be careful for low volume and flashes of pockets of just, you get these exacerbated moves to the upside and the downside, whether there's an algo ticking it off or not. So we made a higher move high barely this week. You can see we're hovering and chopping around. This is a big sideways. This market is more likely to settle back towards where it was a couple of weeks ago, to even taking out this $1.2821 level and chopping around in this area. I could honestly see this being where we push the upper end of this range. We're going to chop around. We're going to flirt with this $1.2518. Even if we take it out, I see us bottoming, and you can see that this has been one wide range trade for a while. It started where it was railing, and then all of a sudden the rally petered into a sideways trade. Did we make a higher move high? Yeah, but it's barely. So there's a ceiling. No matter how strong the U.S. dollar is versus these other currencies, it's pretty much capped versus the Canadian dollar. A lot of that has to do with the fact that, for whatever reason, and I've explained this in videos before, the U.S. and Canada can't get their border crossings, their trade deals, and a bunch of other things put into place properly. And why, I don't know. I can't understand why they have a. I mean, we basically have a communist president in the United States and a communist premier leader in Canada. They should be on the same page. They are when they're outside of the country, but then when they talk with the U.S. and Canada, all of a sudden there's a little bit of friction. So, and that's going to be maintained. This is just a hard market to call. I would key off the last swing high and the last swing low. If we take out this $1.2821, I see us chopping. But I don't see us getting down, really setting a trend. We have to wait for some real big news to really establish a trend with the U.S. dollar Canada. This is the only currency right now that's not trending. I mean, if you look at this on a monthly basis, it's been trending higher, but it's a grind. I mean, it hits the high, comes right back to the low. I mean, it's just barely making highs and then coming to just shy of the lows, setting a higher move low, and then making a higher move high, barely, and doing the same thing. So, I mean, you look at this up, down, up, down, up, down. It's green, red, and the bodies are just self-absorbing pretty much the whole way. So as long as that momentum continues, which I don't know how it's not going to, I say stay away from this one. It's just a hard one to read. All right, so anybody have any questions about any cryptos as we get into it? Because we're going to start popping them now. You got the newsletter, oil. Gary, you got your newsletter, oil 130 to 150. Yeah, that's what we're looking for, Gary. Glad. Thank you for signing up on the newsletter. Yeah, we had a buy signal in crude. I'll pull this up here. Where was it? We got the CL1. All right, this is for Gary out there, who is now a subscriber to the Tiger Forex Report. Thank you very much. Yeah, 130 to 150 and beyond. We had this bullish engulfing line buy signal that occurred yesterday. And let's take a look at where we're at right now. Let's see. Ooh, bonds are down to 136.28. Let's mark that right down here. That is really good. We're coming right shy of our corrective zone. Loving that bond trade. Absolutely. I love the bonds. I've been trading the bonds for 30 years. All right. I still trade the 10-year every once in a while, but it just doesn't move as much. I know that's the one that everybody likes to trade now. That's because it's pushed by all the economists and people who don't trade for a living. So, but whatever. 104.70 is where we're at here. So 104.70. 104. Let's put it 76 and make this line black. All right, so right now we had this bullish engulfing line buy signal. Gary got the Tiger Forex report. We talk about the major currency crosses. We talk about the euro, the pound, the Swiss, the Aussie, the Japanese yen, and the New Zealand dollar, and the Canadian dollar. But we also talk about the 30-year Treasury bonds, the 10-year, occasionally. We also talk about the dollar index, and we also talk about light crude futures. Why? Because all three of those influence our view and the trends in the foreign currency pairs. Now, oil is indicative of certain ones, not all of them, because obviously when you have two oil-producing countries, that trade's really off the table, or depending on how big or small their outputs are. Especially now where we have the U.S. that was an energy net supplier is now a importer. That changes its dynamics too. So the value of the strength in the dollar with the crude trade is diminishing because of that. Well, anyhow, we have the bullishness of the engulfing line, or bullish engulfing line. It has us targeting this upside target zone. This is bullish for the U.S. dollar yen and the U.S. dollar Swiss in the short run and in the long run, getting to our 130, 150 target. If we get through this upside target zone of 109 to 112 and pierce this 114 area, well, that has us buffering up against the highs. The trend, no matter what, is a bull. This has been a downside correction that was stressed, until the past couple of days. Is it going to go and rally up there overnight? No, I doubt that. Could, but I doubt it. But yeah, 130 to 150 and beyond. Yeah, we have supply issues now. Even if crude was to stay where it's at right now, gasoline in the United States, guess what? That price is going up. And that's just going up. It's not just a supply issue. It's a refining issue because our illustrious leader, Joey Biden, shut down a refinery in May. Yeah, that's right. And when he was getting on his soapbox in June saying that the refineries need to pick up their capacity and the gas stations need to lower their prices. Well, he doesn't know what he's talking about as far as how gas stations get their pricing, because gas stations don't set the price. They get a delivery and they pay what they pay for gas, and then they pass on that difference to the consumer. So it has nothing to do with that. It has to do with deliveries. It has nothing to do with refining. It has nothing to do with the gas station itself. It has to do with supplies and deliveries. That's why you have options and futures that expire every month in the crude markets and in the gasoline markets. That actually helps to keep prices stabilized. Could you imagine if you were doing them quarterly like you do with the financials? That would cause so much price instability in the oil markets, especially in an environment like we have right now. However, supply, we already know that something that they're not talking about in the news, but leaked out of the G7, is that Saudi Arabia and most of the rest of OPEC are at peak capacity. You know what that means? That means they can't drill any more oil if they wanted to. And you know what? At these prices, they want to. It's very simple. It's simple math. They want to drill more oil. They want to dump it on the market right now. This is their time to shine right now. They are doing very, very well. You know what? They can't do any more than they are doing. For any of you that has ever taken any type of business classes, you reach a point of diminishing returns in productions and all kinds of things. They've reached a point of diminishing returns. Unless they are to literally expand their infrastructure, open new wells or stuff like that, things that are at a cost, which would just drive up the price of oil even more in the short run. And it's also short-lived, because you got to remember that eventually there's going to be this stretch. What's going on with oil production globally is probably going to come to a head soon. The fact that Russian oil is not making it on the market is driving prices up, decreasing supply. They're sitting on a ton of it, and by the time they even say that, okay, you can release this, they're going to be like, well, you've had the luxury of enjoying high-priced oil and making all kinds of money during this, and so have they, but then they're going to be like, well, we're not going to just dump it on the market. Or they could, if there's some reason they want to help the world out. You know who else could do that? The United States. Oh, wait a minute. On January 20th of 2020, 21 rather, somebody signed an executive order that stopped that. So until that executive order is overturned in the United States and we become a net exporter of oil, which, by the way, at the G7, Macron started leaning on Joey, saying, hey, dude, you guys got to be a net exporter again. Green New Deal just isn't working out. It's killing the rest of the world. It's killing their economies. It'll be funny to see what the response is at Christmas time, when Europe has in a complete energy crisis. The euro, the pound, and the Swiss are trading much, much lower. And because there's so many factory closings, they won't even be able to export to other countries as much as they were before. Not looking good for them. So, but it's looking good for us traders. That's what I have to tell you. Looking very good for us. All right, so let's go to the BTC USD. We got our weekend traders. There's no more opportunity with the Forex markets after this afternoon. So for all of you that are out there in crypto land and Forex land, let's see what's going on. All right. BTC USD, look at that. The past couple of days, it made a breakout to the upside today, but it's basically unchanged on the day. Why is that? Probably because of dollar strength. I would say if you look at the hourly here, let's do that. Oh, yeah. So we had this dollar strength, we had Bitcoin strength. That was when the dollar was really weak. Then we had dollar strength that came roaring back. And then all of a sudden it got weak, but oh, look at this. It's not looking so good right now, is it? Oh, remember what we were talking about earlier about Bitcoin goes down, gold goes down, the stock market goes down, US dollar goes up, and away. Here we go. Here's another indicator. Well, you have all three of those that are hitting support by the dollar. By the dollar. I'm not telling you what to do, but It's not in every single by the second does it work that way, but that is when your indicator gives you a sign. Also, what do we have here? We have a head and shoulders on the hourly forming. This is why we don't get more than an hourly basis for intraday trading. We just came off a higher move high and made a higher move low. Just made a lower move high an hour ago, and now we have what looks to be a bearish engulfing line sell signal forming on the hourly basis. Well, we have another 14 minutes to go. See where we are in 14 minutes, folks, for the BTC USD. If this settles where it's at right now, I would say that most likely it's going to continue to go lower. If that's the case, that means that this unchanged on the day, making a higher move high on the day, just taking out this last swing high right there, could be done. Could be done for the day. May or may not be. Anything can happen. Now, we need to get above this area, this high right here of 21,838, and sustain a trade above there to have us bucking up against this downward sloping resistance. And then we have 24,838 to 26,765. This most likely is the biggest cap. If this is just an upside correction, meaning that the bear market's going to stay in place for the BTC USD, then I would say that you're very likely to run out of gas in this area and then start to go sideways to lower. If we get above 26,000, well, then that's a nice short-term kind of bullish for BTC and the other cryptocurrencies. I think what we need to do is check out something else to see if that's very likely. Ethereum US dollar. Oh, look at this. This is why we look at other markets as indicators. Bitcoin made a higher move high and broke out to the upside. The Ethereum US dollar has not done that, and it's lower on the day. Does the dog wag the tail, or does the tail wag the dog, is the question. When we talk about this, it's very interesting because when Bitcoin first came out, obviously it was the giant. It still is. It's the most talked about of all of the cryptocurrencies. It is what everyone watches. Whether or not it's going to maintain its strength as far as the overall dog, if you will, time will tell. For a long time, I was equating Bitcoin with the dollar index. Now, we know Bitcoin is not an index, so let's not confuse the simile like or as or is about what we're talking about. Okay, so when you have Bitcoin as an index for the whole quadrant of cryptocurrencies, it's the biggest, so where it goes, a lot of other ones will get hurt. That seemed to be the case for a very long time. Now, however, it doesn't seem like Bitcoin overall is doing that. What it really seems like is that Ethereum is the one that's wagging all of their tails, if you will. So when Bitcoin really moves, it's more being influenced by Ethereum. And here's the other thing: is Ethereum's a tighter trade. Bitcoin tends to overtrade. So this is divergence. We have Bitcoin that made a higher move high, Ethereum failed to and is now lower. That divergence right there tells me that either we're in for a big rally or we just saw the spike and we're going to see the market trend lower. So I don't know how many of you are out there that you own Bitcoin or Ethereum or any of the other cryptos out there. Could I buy the U up here? Can I buy the U up, Gary? I don't know what the U up here means. That's a misspelling. Maybe make it a little clearer on what you mean on that one as I'm getting through the stuff with cryptos. So as Ethereum trends higher or lower, I think that is more of the index, if you will. It's not an index, but it acts kind of like an index indicator. And I do believe that that is the one that's really the one you have to watch out for. So if you're long Bitcoin or looking for the bullish follow-through, watch Ethereum. If Ethereum breaches this 1,286 last high level here, and especially if it settles above it, by all means, I would expect to see follow-through to the upside in both Ethereum and Bitcoin as they climb higher. How high can they go? Well, that's a really good question. Now, you realize that if we do breach this area, that means that we have confirmed a short-term neutral to higher trade with the Ethereum in a very good way, because we will come off of this significant lower move low. We made a lower move high, and then a couple weeks ago we made this higher move low, and now we're flirting with this breakout. So sustainability is going to be a big question, and we'll see how that happens. If this is stable to lower over the rest of the day and into the rest of the weekend, well, then I think that you're going to probably have a little trouble as looking for higher levels. Am I saying look at it as a break to buy? Yeah, I think that right now Ethereum, if it starts to chop lower, as long as you're above 995, you're okay. If we fail from 995, then I would expect the whole crypto quadrant to sell off. So one thing I have to say right now is don't try and catch a falling knife. If you're holding positions from a long time ago and you're looking to pad your losses, look to sell out of rallies. I wouldn't look to buy into breaks, because we're making lower move lows and lower move highs. You're better off getting out at higher move highs because you're already long, and then waiting for the market to make new lows, bounce again, and unless it really confirms a turn, nibble out until there's a reason to get really, really long. My long-term forecast for the cryptos is just not that they can't all turn around, or maybe they will. It could take months, it could take years. And also when quantum computing comes into play, which is coming sooner than later, well, all the cryptos are gone at that point, except for the ones that adapt to quantum computing, and that's a whole nother level in itself, and what those dynamics will be very questionable because of what's going on in the crypto space. All right, let's see. We got Boost Junk 1. Thank you for the information. You are very welcome. Thank you for hanging out with us here on Twitch and laying in a comment. We hope that you are, well, I assume you're already subscribed, and hopefully you pass it on Twitch and or on Twitter and Facebook and stuff, our videos live right now and what have you. By the way, can you see that it says rain off and on right now? Yeah, it's raining right now in the city of Chicago. Kind of nice though, because it was really hot the last couple of days. Yesterday was only low 80s, but it was super humid. Today it's in the 70s, not as humid, not so bad. So, all right, so Ethereum US dollar, we can see that we have no signal, but we're buffering, waiting for a breakout. Let's look at XMR US dollar. All right, XMR USD. Look at this one. Now this one, if you watch our videos, whenever I talk about cryptos, it's not that I'm gung-ho on Monero, but I like it as far as technology and sustainability and its value where it's at right now. This is another one that I think that if there's anyone that can, if there's going to be some divergence, if you will, away from the rest of the crypto sector, Monero is the one I think that can hold value. You can see this is very similar to what's going on with Ethereum. The high here was 133.70. The high today is 133.70. So we have a double top formation going on right here. So if we can get this trade above today's high, okay, of 133.70, basically 74, very likely we'll be pushing this 139.44 area. That has us, you know, we have this downward sloping resistance here. This is the first one that by attrition will break the trend as it's making higher move highs. That's a very positive sign for Monero. So if you own Monero, I would be watching this trend line here as the base. As long as it maintains along this upward sloping support line, I think we're obviously coming by attrition. We're wedging through this no matter what. Are we breaking out to the upside in a big way? No. But we do have this key level right here, ironically, if you will, that if we can get through this critical zone here, well, then that's pretty bullish, don't you think? Now, does it mean that we're going to shoot back up to 200, 250? Maybe, maybe not. But I think for a long trade, if we can get above there, you have a good chance at seeing some follow through to the upside. Let's see. Oh, you're in London. It's steamy out here in London. Oh, that Boost Junk. So you got some a lot of activity going on. Besides the heat, you got the tennis action going on and a bunch of other things. So I have some friends that are in Europe right now. They are in Italy. They're actually going to London soon because they're going to Wimbledon to watch the tennis. So, or whatever, or were there. I don't know, maybe they were there already and then Now they're in Spain. I don't know. They're bouncing around. I saw it on Facebook. So, but yeah, you guys got all of the fun stuff going on with the sports there, and definitely you have the hot weather just like we do. It's kind of funny. I have communication with some old contacts in the financial space, some that were actually on the trading floor with me at the Chicago Mercantile Exchange and the board, who live in London now. They're from the UK, and we laugh about how there was times where in Chicago, I used to live downtown, we'd walk out of the Merc, and it would be the temperature would drop so much that the lake would cause a fog where it was like London. They'd be like, oh my gosh, we went from a sunny day in Chicago to now it's like we're walking out of the CME, and they think we're walking out of a door in London. So it's just thick as pea soup and what have you, and whatever. Plus we have very similar weather in Chicago to London. I mean, we're pretty much straight across, relatively so. But yeah, thanks for your input, and yeah, stay cool there in London. So, all right, so we have Monero. We talked about that. We have some upside levels we're looking for. By the way, if we do breach this area and we get it back above this 152 to 166, if you're long it right now, you might want to nibble out a little bit if the crypto the cryptocurrency as a whole are down. But if they start to rally, just nibble out a little bit, or look for maybe even a little more of an extension, because before we had this big slide in Bitcoin and the whole crypto sector, basically Monero had a good buy range of 220 down to 180, and then you'd want to get out between 250, 60, and 300. It could spike above it, spike below it, but typically that's your range, and buying in that band and selling in that band was a pretty good trade for quite some time. Historically, pivots hold up. Sometimes they do, sometimes they don't. Anything can happen, but if we get that market up into that area, you may have a lot of interest that comes in on some people that just follow Monero to begin with, because it's just a good buying area. And their expectations, if it gets back to 200, why can't it get it to 250, 300? At that point, you start to get capped. The cost of technology, remember, technology, the premise of technology is to be faster, better, and cheaper. Cryptocurrencies, yeah, I guess, are faster in some ways than other systems in place. Better is a matter of perception, so always be careful with that one. Cheaper, well, that's not happening. The cost of the technology, as well as at the cost of the cryptocurrencies themselves, diminish the value of the technology as it gets more expensive, meaning that there's no value there whatsoever. And I think we've all learned that Bitcoin is not a hedge for inflation, neither are any of the cryptocurrencies, but the technology being used, Monero is being used in a lot of payment systems already across the globe, and especially throughout Asia and Europe. So I think that as long as that network is maintained, and it seems to be very efficient and working well right now, you hear about Bitcoin, this and that, you don't hear about any explosions in Monero or big major thefts or what have you, or a problem with the technology being used by the integration into business systems now. Since you don't hear that, well, no news is good news. Sometimes boring isn't sexy, but you know what? If it's working and it's paying the bills, what's wrong with it, right? What's right works, and what's right work. Or what's right works, and what works is right. So tongue-tied today. Sorry, I need a little more. I've been talking now. I didn't realize we've been talking here for an hour and a half almost. All right, now we have the Doge USD. We got any questions here? We got nice comments. Thank you very much for chiming in on Twitch. US dollar index ticker. Oh yeah, okay. All right, yeah, we went over to Dixie a little while. Went over the dollar index a little while ago, Gary. We're gonna get back to that for you. No problem. As soon as we finish up with the Doge. Oh, I got dog, not Doge. Let's see. DOGE USD. There we go. Doge USD. Here we go. This thing is winding its coil, wedging. Now this one here, I think you gotta be careful with. I don't care if Bitcoin shoots up to $100,000. Dogecoin, their technology is a dog coin. Okay. There is no sustainability of the technology. There is no long-term remote chance this technology is going to be viable in the future, except for the Doge fans who like the meme and what have you, and say, I'll be a Doge guy for the rest of whatever, and it's gonna last, and they're hanging on. Well, good luck with that. I'll tell you what. I know some people who were they liked it at 40 cents and 30 cents, and they're all like, "Well, I'm gonna get out at 60. I don't think it'll be a Bitcoin." And I'll be like, "I don't know. I think you're gonna be lucky if you can get out of it at 6 cents." You have your opportunity right now. It's at 7 cents right now. I had some that I took as payments. I got rid of it, most of it right away. The only stuff I kept a little just because I'm like, well, in the event that this stuff actually ever does take off, and even if it just gets to $1, I could sell the remainder of it, pay for a dinner, or excuse me, half of it, pay for a dinner, and then if it really explodes, well, I'll make some more money off of that. I'm not looking to make a killing on it. I don't even think I'm going to ever see a profit on or any more money in value on that. So in fact, if it gets back to 30, 40 cents, I'm most likely going to be a seller. So I don't know about what you're if you got any takes on Dogecoin here, I would love to hear it. I'm a fan of the swing and the trade, but it's just I think it's in the dog days of summer. It's in the dog days of crypto as well. So just be very mindful of that one. All right. All right, so let's see where the bonds are at right now. They're trading, let's see, down to, that's the crude. Oh, sorry, crude is at 104.57. So 104.57, let's see what that's doing to the Forex markets. CL1, 104.57. Okay, so crude's come back down just a little bit. And now let's take a look and see what the interest rates are doing. Because they have really been swinging around today, folks. I love the bonds. 136.28. Oh, you gotta love this. You can't make this up. So here we are, just above this key support area here. We'll put the ZB1 in here. All right. So we have the 36.28. Look at that. See this? Yeah, I gotta make that green line stick out a little bit more. Let's make it, there we go. All right, you can see the 136.28. This is the bonds, our sell signal, which was in our Tiger Forex report, by the way, is coming to our target zone. Do you have a course? Boost Junk 1. A course, I've done educational webinars and had a course a long time ago. I stopped that business. But what I do have is we have the Tiger Forex report. It's a weekly newsletter that comes out. You can get it through tfnn.com. Right above you on the chat, there's a link there with a 30-day money-back guarantee. And for the next couple weeks through the month of July, our soft launch month, summertime's not the best time to launch any type of financial course or whatever, we have a 25% discount, meaning for the life of the subscription, as long as you don't skip a month, you will keep that rate locked. So do have that. We have some trading signal. I do have for institutional business some signals and things that I do. It's now going to be available to the retail sector because I deal mostly with global retail traders, and I mean there's still Forex traders in the U.S., but I only deal with reputable brokers. So we've been developing a way of having the signals being released through only prime brokerage houses, so that if you are in almost every part of the world, you'll be able to take these signals and have your own account. We have nothing to do with your money. We will never have anything to do with your money. The trades will be all up to you whether you take them or not. You set to follow them, and they will be set in proportionate to your account with instructions on how much you need to have. Whether you can have a mini account versus having a major account to trade those signals. So that will be out soon. We had it going for a while because of compliance with one firm that we were dealing with. There was troubles with the execution. I do everything by full-blown transparency, full-blown compliance, and everything is done on the up and up. We have so many people trying to commit fraud in the name of Forex Trading Unlocked, which you are dealing with the owner right now. Yes, I own the company. Fact. You can look it up. It's public record. It's all over the industry. There are over 200 people committing fraud saying that they work for Forex Trading Unlocked. I can tell you right now, there are some independent contractors who you will never have contact with that work for me. There is nobody besides me that works for Forex Trading Unlocked. So if someone's coming through WhatsApp
And that's why with Discord we had a lot of animosity about going back on it. There's a lot of people that are conning people, selling courses, if you will, and other things in the name of Forex trading online. So everything we have comes through our website and then goes through third-party institutions where everything is compliant, full disclaimers, full transparency, and you will never have us asking for your personal information through something like WhatsApp or anything like that, let alone asking for payments where we're opening up accounts for you after we receive a check or something like that. No, that's not how it works. Any signals and whatever. Now, as far as a course, we are coming out with a new course because of summer. Like, this is a soft launch time. It's not a good time to release a product, and we're growing. Our following is drawn to a point again where it makes it worthwhile. So we will be having a course where I will be doing one through Forex Trading Unlocked exclusively, and we will also be doing one with TFNN.com that is in the works, but right now it's just not the time of year. So, excuse me. Excuse me. Got to get some fluid in my throat. There we go. As we get into the fall, in September, we will be having tons of information on that, just like I think you just joined us in this broadcast today. We're working on the format to have a scheduled time for webinars, as well as just our analysis videos like we're doing now, so that people can work it around their schedules, know when we're live, and interact with us. So yeah, we're looking forward to expanding that. If you have any suggestions about what you'd like to have to hear in our videos or even on our courses or whatever, you just leave a comment in our comment sections. Join on the chat here. Talk to me right now. Let me know what you want to hear and the feedback. We love it. We're using it. That's why we're growing our products and stuff. But we do everything transparent, clean, and it's right. We won't put out a product unless it's all pro to begin with, and very user friendly, very direct. And there is no way that anyone can say that we are not compliant and anything like that. You may not like our views on the markets, but hey, everyone has their own opinion, right? So, all right, so I'm going to talk about some other markets here, but let's see. I'm getting semi-decent at trading now. I'm going to go on an edge getting into FX stock. Would you say there is a better or worse than the other? Very good question. All right, we have a question on Twitch here. I think you guys are going to love this one. This is fantastic. All right, I just want to put this one market up because I have a position on, and while I'm explaining this question on Twitch, there we go. Thank you, Swissy. Keep on rallying. Okay, so for Connor K, he's just starting to get into trading now. So we have a rookie here. Thank you for your question here, and good luck with all your trading endeavors as you move forward. Treat it as a business. Take it slowly. As long as you're here, the markets will always be here, and if you're not here, well, then you don't get any opportunity. So, stock versus FX trading. Very good question. One thing is that you have leverage in both stock and FX trading. FX is all obviously leverage to start out with. Money management is key. Okay, so the key thing to that is one, paying attention to your reward to risk ratio, how much capital you're using and putting up at risk at any given time. Know that leverage is a double-edged sword, so you can make a lot of money much quicker with the less amount of money in the FX markets, but it also works the opposite way. With stocks and options, and I do webinars on options, there are all kinds of strategies and spreads that you can put on that are fantastic ways of even trading the Forex market, even though you're not trading in the actual FX market. You can trade ETFs. There are all kinds of options. There's binary options. Depending on where you are, I'm assuming you're in the U.S., so when it comes to platforms and things like that, you're limited to a couple different platforms for Forex. And then as far as for equities, there's a lot to choose from. Some are okay, some are marginally okay, and some are fantastic and they don't cost a lot of money, and some cost a lot, which is way out of what you need to do right now. So for stock trading, I would think that if you are just getting your feet wet and you got a real job that you're paying attention to full time, that stock trading and option trading is something to start in. It's slower paced. There's not as many dynamics going on globally that you need to pay attention to. And it's just a matter of what you feel with and what you like. It's easy to get a lot of information on stocks and options in the U.S. Just stay away from the little penny stocks and the pink sheets and the OTC. Stick with NYSE and NASDAQ if you're going to trade stocks. All right, Connor? And now options, options give you leverage also, but your reward to risk potential with options is so much higher than with stocks. Stocks, here's the problem I have with you starting out with stocks. One, never short stocks. That is only for highly capitalized, highly experienced traders. So the only way you can trade stocks is by getting long. So unless you're buying dips in a bear market, which is a counter trend trade, which reduces your chance of success, you need to be long in a bull market, which anyone can do well in a bull market. And if you have a bull market combined with a bull trend in any stock, that's typically going to go well for you. But that's only a one-sided trade. So you can trade both up and down moves with options. Now, you got to know what you're doing with options. There's a lot of simple retail trades you can put on. You can do straddles, strangles, outright calls and puts, condors, butterflies, iron condors. These things may sound foreign to you. If you go to my YouTube channel, I have a playlist for eoption.com. There's all kinds of spread strategies that I've gone over the past couple years since I've been working with them. And then go on their YouTube site and on their website as well. I mean, you can go to like TD Ameritrade and some other ones. I don't work with them, and some of it you have to sign up for, and you got to do all kinds of things just to get any information. I would say start at the beginning. Educate yourself first before you even think about dipping into it. You can reach out to me on Clarity if you go to my website, forex-trading-unlock.com, under the services page. Like if you come, I'll show you right now. If you go to Forex, my website, Forex Trading Unlock, product sources and services, you can go to mentoring. That will give you where we can do a consultation and communicate. Another thing is if you want to learn about how to help trade stocks, options, and FX better, go to our high probable Japanese candlestick patterns page. This gets to you in London, Boost Junk. If you read my book, which is out on Amazon.com in paperback and Kindle versions, come to our website. Make sure you put a little tweet out and promote our page while you're there. There's a video about the book. Also, there's a little short preview share you can buy. It gives you access to Amazon.com. It's in Kindle version. You can read it on Kindle Unlimited. It doesn't cost you anything because you already pay for the monthly subscription. These would be great ways to get into trading Forex and options. Also, it gives you, there's money management. There's a whole chapter on money management there. So the biggest thing, whether you choose to trade either options, binary options, or FX, or even stocks, is you need to make sure you have a trading plan, and money management is key. I don't care if you're not a trader. Money management in investing or even in any business is absolutely crucial to your success. There's a lot of easy mistakes that everyone, even experienced traders and investors, make that you can learn to overcome and avoid. And then there's things that it's not so common sense, but when you learn them, you realize how powerful those dynamics are. So whatever, you don't have to believe in my systems or my methodologies. You may have your own that works fine for you and you're happy with it, but I promise you, you read the chapter on money management in my book, it will absolutely give you help in the future for sure. That's just a guarantee. I cannot impose on you that one. It's not just tooting my own horn. Plenty of people from the business who, even before I published the book, they're like, you should sell just the money management chapter as a book, you know. So I'm going to give you a link right now. This will help you out, Connor. A couple links. And you can sign up for my Forex report too, just for a month, and then, you know, quit it. You don't have to keep it, just to get an idea on certain things in the markets. But here's a link to my YouTube channel to sign up. And also on there is a playlist and also a link to the YouTube channel for eoption.com. Check out those videos there, okay? And then also I'm going to send you a link right now here for high probable Japanese candlestick patterns. Obviously, this is good for any of you out there listening right now. Check it out. Kindle and paperback versions. The money management is definitely the one to pay attention to the most. And that works for all markets, whether you're an FX trader, futures trader, stock trader, options trader, it does not matter. Let's see, send a link of your website. Yes, I can do that too. Bouncing between Twitch and YouTube. All right, just let me get this copied. All right, got that copied. Shrink that. Come back here. This is for you, Anurag. Excuse me, Anurag. Here is the Forex-trading-unlock.com website link. Excuse me. Oh, I've been talking for so long. I'm barely drinking anything. Okay, much better. Sorry about that. Sorry for coughing into the mic. All right, so there's the link for that, and I'll put this out on the Twitch channel too. So you have the link to forex-trading-unlock.com right there. Make sure you go there. Go throughout the website. There's all kinds of great things. And if you go to the workstation page, that's what we're doing. Like all this analysis we've been doing with these charts. When you go to the top on our market analysis and education, you go to workstation, click on that. Brings you this page, and it shows you all the economic numbers and whatever coming up for the either did this week or next week charts. And then there's other stuff that goes down on the page. It's a great place to, I mean, you can see there's not all kinds of pop-ups and ads. We do have 2 ads on the thing, but the loading is very quick. You can use this for free. It costs nothing. There's no login, no nothing. We don't, once again, we don't just take your personal information or anything like that. It's not how we do things. We are not some fly-by-night scam, bucket shop kind of operation or anything like that. In fact, anytime we find out fraud, we broadcast it out there to the community and try and protect you people from it. So, and once again, if you got anyone out there saying they work for me and my company, absolutely stay away from them. You only come to me because I'm the only one. That's it. Except for in the technology space, I have some independent contractors and whatever, but they do not work for me. They do not represent my company, and they never say they do either. They work for other companies. They can verify them, and they are partnered with my company, never representing my company. Okay? Very important that you get that. All right, so Connor, I hope that that was some good information for you. Check out those links. And hey, man, keep on checking us out in our videos. You know, reach out, and if you have any questions about anything. All right, Connor's in the UK, so you're out there with Boost Junk too. I guess you guys are, well, the London markets are closed. So yeah, now see, this might be a good thing for me to know is that another time when I found a lot of people in the U.S., it's not during the market hours, it's after they're closed, like an early evening. And I used to think it was more Asia was there, but that's the U.S. people. So I guess when you guys are done working or you're done with the trading you're doing already, now you're ready to watch me. So I'll work on that for time slots. Let's see, UK, wish it clear options trading sounds risky for me. Yeah, options trading, you got to start out as a beginner. There's certain spreads and things like that are very easy to implement, but you got to be aware of how markets move and the dynamics of the cost structure of options. But if you have ideas on where markets are going, it's a great thing to do. FX, the one thing about FX is, especially with your major pairs, is the liquidity and time frame. Like, why do I not trade futures as much as I used to? And I'm a trading floor guy from Chicago. One is because there's downtimes. The beautiful thing about the FX markets and why I trade FX markets predominantly is because they open up on Sunday night and they are closing in a few hours Central Standard Time on Friday. So they are open 24 hours a day, almost 7 days a week. Those lags in futures and options and stocks, you have gaps. The market's closed. All of a sudden, anything can happen overnight. Big money. And the thing is, the Forex market's moving. You know, people used to say, oh, the Bitcoin market's open, 24 hours a day, 7 days a week, and that's why the stock market opened up this because Bitcoin did that. No, that definitely never happened. However, the Forex markets, which are open in front of the debt markets and the equities markets on a Sunday night, well, that's already got things going. And then you have the electronic trading that kicks in later for the futures in the U.S., and the FX markets are already going. So you will have sometimes gaps in the FX market, and because of those gaps, that creates gaps in the other ones, and it causes all kinds of volatility and risk that you take on that you avoid that by trading Sunday to Friday with the FX markets because of those closures of time or either during those particular days or the fact that there is not open. I mean, there's no U.S. equities open until Monday morning. Now, they do, yes, there is a night trade or whatever, but most people don't have access to a lot of that liquidity, and there's not much there either. So, but yeah, FX, Connor, the nice thing about FX is you can start out as a super micro mini trader and get your experience in multiple markets, build up your discipline and your trading strategies. One of the things I talk about even in my book is that, like I said a few minutes ago, if you were listening, is that, one of the things I learned from one of my old guys on the trading floor is that there's always opportunity. The market is going to be here. Well, at that time it was only open Monday through Friday. So 5 days a week, the market's there. 5 days a week, there's potential opportunity. What happens when you make lots of bad trading mistakes or you treat trading as gambling? You lose your capital, you have no money to trade with, and you are not able to take opportunities. So there's something called opportunity risk. One of the biggest risks is you not being able to take opportunity, though. And that's because of your own mistakes, either lack of discipline, lack of a trading plan, or gambling. If you have a trading plan, you watch your capital. Don't risk all your capital. I mean, most people don't realize you're never supposed to have more than 5% of your total capital at risk at any given moment, whether you're trading or investing. That blows money managers' minds because they don't want to even remotely hear you say that. I mean, who puts only 5% of their investment money into mutual funds or stocks or whatever, and then keeps 95% in cash? Well, 95% in cash then really isn't an investment anyhow. It's just saving money. But now rates are going up. Not a bad idea. And unless you have a real plan and have targets and risk levels, why would you put your money up? Because over time, it's going to show that you're going to lose money. That's why. So, and that's the same thing. You can manage that in the FX market. So instead of worrying about starting with a $50,000, $100,000 account, you can start out with a couple $100, $500, and trade the micros markets in like the Euro US dollar, pound US dollar, the yen. When you have signals on, you can put those on. Your risk level is very small. Your reward to risk level is there. And guess what? You can turn a micro account into a big account. Absolutely. I have plenty of students that are beginning traders that they buy systems or whatever, and they're wondering, why doesn't this work? I've had people like, I bought so-and-so's course, why doesn't it work? I'm like, well, I don't know. I have no idea what kind of garbage they sold you, or methodology or system or what have you. So, I mean, I'm familiar with a lot of things that have been offered out there, but I don't buy other people's, especially there's a lot of just fly-by-night, you got to watch out where people get sucked into marketing. You have all this, bam, wow, we make 100% on every trade. Well, guess what? Nobody does that. The better it sounds, the more likely it's nothing but nonsense. So are people profitable in the markets? Absolutely. I know people that have been trading for a living for 40, 50 years already. They're not retired because they're like, why? And they make money trading. It's not like they're working and they don't go down to the trading floor anymore. So, but there's plenty of opportunity always, as long as you are disciplined and maintain your money management. So if you do that, you got success on your way and on the horizon. So at least definitely failure is not coming up sooner than later. Very good questions. Really happy with your responses on today's stuff. So let's see. Thanks a lot. You noted. Yes, I am on your web page. Great. So okay. So those links, you got that. Cool, yeah, go check around the website there. You can see all kinds of stuff. We have lots of good information on there. There's a reason why we're partnering with the companies we are. Like even when you go on our website, you have access to, you come back up here. We have obviously the mentoring. The Market Center, this is something we had to close down. The trading course is something we do have it, but you have to sign up through the mentoring to do it. So that the one question we had about that, we don't just sell courses out to everybody. We do a custom catered thing, whether you're a very beginning retail trader or an experienced trader that needs to hash out some things. We do a quantitative breakdown of where you're at, what you're looking to do, and what we can do and provide for you and help boost your career and enhance your success in trading. Okay. Under tools, if you go to Ninja Trader platform right here or multi-charts, those are great trading platforms for learning how to trade as well as do analysis. And then we have for Ninja Trader all kinds of information on them. You can get download their platform for free. It's a great platform to use just for learning how to either gauge stocks, Forex, futures, whatever. There's all kinds of things that you can do with that. So, Anurag, thank you for all your participation today. It's been a good day interacting with you. And Gary, great to see you again. So now I know when you got, I know when Gary, we've been interacting for a while now. He's great. He's been on our webinars now for, I don't know, Gary, I think it's been at least a couple months, if not even going even further back than that, when our time slots seem to match up. You know, very fun, love it, seeing repeat people. And on Twitch, Boost Junk, I know I've seen you on there before. Connor K, very happy to meet you and glad you're out there sharing with us and asking questions. Let's see. Yeah, I trust you more as I'm not being so catch-risky. That's pretty funny. You know what? I got a good one for you. You'll appreciate this, Connor, and all you other viewers out there. So I do consulting. I had a call. This was almost a year ago, literally almost a year ago to the day. It was end of July, and someone who follows my videos, he travels around the United States, and he said, I'm going to be in the Chicagoland area. Would it be possible if I could meet you? And I'm like, well, of course. You know, I'm like, we can just do a call. I'm like, he's like, no, I'd really like to sit and talk to you about some stuff and what I have going on and have you look at some statements. He's like, he got involved with somebody in Florida who was dealing with a trader out of London, Connor. Supposedly he was in London. Well, he told me that this person, he gave them money. He started out with $5,000, and he told me that, at least according to his statements that he was seeing online, was that he was making money right off the bat. Within 2-3 weeks, he had more than doubled his account. So he turned 5,000 into 10,000. Now, I want you to listen to this clear because this has all the markings of the iconic scam of scams. So they had asked him, do you want your money back? Whatever, you know, we can give you your initial capital and we'll stay with whatever, you know. And he's like, you know what, actually, I'll give you more. Well, here was one of the reasons he got sucked in. They told him that the trader in London knew he would only enter trades at a certain time on Monday through Friday, and he knew exactly whether to buy or sell whatever currency pair it was, whether it was the pound US dollar, euro US dollar, but he knew exactly at that moment to buy or sell that market, and then within less than a minute or so, a couple minutes, it would have a huge move, and then he would guarantee that this happened 100% of the time. Okay? So I'm sitting with this gentleman. I agreed to obviously meet him. We meet at a Panera Bread of all places because I was literally on my way to go meet someone to play golf, and I'm like, hey, I got this little window. So we meet at Panera, and I only charged him what I charge when I'm over the phone for my consultation. And he's telling me this story, and he's like, is there any way in the world that this is possible? And I looked at him, and I'm like, all right. And I had a copy of my book, and I told him what I do and stuff like that. I'm like, well, first of all, everything you said, besides not being compliant on so many levels and already being on the fraudulent level, I'm like, it's got holes everywhere. And so he's like, but is you sure there's no way? I'm like, well, first of all, there is not a trader in history, in the past or in the present now, or will be in the future, that will ever honestly be able to look at anybody and say that they make money 100% of the time on all their trades. It's just impossible. The only way, I told him, there's only 2 possible chances that it could occur. One would be that you're dealing with God, and God decided to pretend to be some trader to get your money and invest it for you because he wants you to get rich because he's trading for you, or she, or whatever God is. So that would be the one possible chance. So I would say that I'm almost 100% sure that that didn't occur, okay, and that would not occur. The only other possibility, and you'll probably get a bang out of this, is if he's a time traveler. So anyone who saw the movie Back to the Future, where the kid had the what do you call it, the atlas or the almanac, the sports almanac of whatever year, and he goes back in the past, so he knew the results of all the sports games. So yeah, if you have, tomorrow's Wall Street Journal today, you could go and make 100% on the transactions of whether you were buying stocks, trading options, futures, or whatever. So barring those two situations, so unless it was a time traveler he's dealing with, and so I'm like, that would be the only way that it's right. And so I'm like, all right, well, let me ask you this. Howard, what's the problem? What's going on? He's like, well, it went from 5,000 to 10,000. Next thing you know is I'm pushing $20,000. I had a friend that wanted to get involved, so he combined more of his money and his friend's money. So now he gave them another $50,000. Now he's looking at just under $60,000 that he gave to this individual. Well, mind you, and this gets back to anyone who was watching the video, if you do anything through my company with, say, following signals, you will never open a brokerage account through me. You're going to open through a reputable broker following the protocols that are laid in place, that are regulated, so that it's your account, your money, you control it. I have nothing that can touch it. You can align yourself with trades, but I have no control whether you do or do not follow them. It is all up to you. You're controlled by you. This person, in this case, he also told me that the account was opened up overseas. Guess what? United States citizens can only clear through 3 different brokerage houses. You cannot, by law, open a Forex account outside of the United States. Okay? So, another red flag. So, long story short, he ended up losing out on $55,000, was scammed, and never was able to get any of his money. The contact started to get to where when he said he wanted withdrawals, they're like, okay, but it takes a few days to clear. We have to put in a request, blah, blah, blah. Now, taking 3 days to clear, that is not necessarily a non-compliant thing. Depending on where you're transferring from and whatever, whether you're in the United States or in a foreign country, it's very, very possible. Good Connor. Damn, I feel for this guy. Yeah, I feel for him too. Believe me, I still check in on him every once in a while, and I'm like, I told him how to go about it with the FBI, the cops, whatever. Like, first get a police report, then go to the FBI, because it is fraud that was happening. And he did physically meet somebody in Florida, so there is a physical person that he did deal with. Obviously, it just kept on going south. Communication, he started losing. And I get these calls so often. I just got, and it's kind of funny. Like, that's why we're redoing our whole structure with our education and a bunch of stuff on our internet. Why I'm partnering now with TFNN with how we do our new product launches, just because there's so many scammers out there. On my website, there's ways of either just contacting us for whatever. I get a lot of submissions where people who are outside the U.S. especially are saying, I gave money to your broker through WhatsApp and they live in South Africa, or they live in Vietnam, or they live in France, or they live in, the worst is when you have them from some of the bigger industrialized countries, because they should know better to deal with reputable brokers and not bucket shops. When you start to get into countries there's a lot of countries around the world, and some of them deal where it's the wild, wild west just in their own country, let alone as far as regulations on financial institutions and things like that. So it's, it is a nightmare. And I get these notes. I had a couple this week. I gave this money. How do I get my money back? I don't have access to my account. And I have to, all I do is I send them back replies saying, we committed no fraud. It was not us. You were scammed. They were pretending. I mean, anyone can go in 5 minutes on the internet, bounce around and steal my logo or some other company's logo. They can set up, and LinkedIn is the worst. Like, I told you how my company page is the number 1 organic and number 3 overall. In fact, I'll even send you the link. Any of you that want to check out the LinkedIn, you can check this stuff out. I don't make this stuff up, folks. All right. This is for you guys. So on LinkedIn, if you go and look up my employees, there are over 200 people just on LinkedIn alone that are portraying to be employees of mine. Guess what? Not a single one of them is mine. Not a single one of them is mine. And I reported them to LinkedIn and said this person is a fake account no matter what. I mean, they're, even if they're a real person and they're actually using their real name, which they know that they're not, they're using somebody else's or just a fake name and picture. LinkedIn, when I complain and tell them that they're false, I need to, in order for me to lodge a full complaint where they will react on, I need to get a court order per count. So for every, that'd be over 200 court orders I would need, and then this is the best. So they're already pretending to be me and faking people out in the business sector too on LinkedIn. Okay, and you can't make this stuff up. So LinkedIn's response is, if you wish us to pursue this claim against said individual, this really is mind-blowing. There's like, besides the court order, if I wish to pursue it, they get to give that side all of my personal information, name, phone number, address, contact information, this and this and that. So I'm like, wait a minute. They're already pretending to be me. Now you're going to give someone who I'm telling you is committing fraud in the business world, in the financial world, my personal information, and I have to give a court order, get a court order for you just to contact them and give them my personal information and let them agree to be investigated. That's the best. It's the best. It's like they protect them. You know, like I love LinkedIn for communication with so many people in the industry. It's helped build my business. Networking is fantastic. I can't speak highly enough about it. But when it comes to fraud being committed, you know, whether it's on WhatsApp or whatever, you know, if there's ways that they contact people properly through the right channels. And if you do things half-assed and take shortcuts, guess what? A buyer beware. You know, a fool and their money will easily be parted. And I'm not telling you you're a fool, but you're acting foolish when you don't follow compliance, regulations, and what have you. So don't try and cheat the system. Look at people. That's why the whole crypto space blew up like it is. Now you have crypto exchanges and brokers going belly up, leverage to the hilt, paying out God knows what kind of expectations and interest on crypto to people that they'll never be able to match. You know, I mean, it's just, yeah, be very careful with it. So, yeah, great story, great question. Let's see, we got another comment here on YouTube. A good video. By watching this kind of video, you can improve your knowledge. Yes, absolutely. Love the money and trading without. That's great. Thank you very much for the compliment there. Appreciate you very much out there. You guys have been fantastic on YouTube and Twitch today. I have to say, it's a Friday, and I guess you guys are winding down your week, but at least you're hanging out with me too. So, all right, let's do a little quick walk around the world. I'm going to tell you what's going on for transparency with the trades that I have on right now. Remember, I told you, come lunchtime, the sleepy time trade is going to probably evolve and then get closer to 2 o'clock. Let's see what the bonds are doing. So we know that oil, it's hanging up. We had that nice buy signal. Those of you who are on the Tiger Forex report, you saw that update. I know you did. Then also we had what going on with the sell signal in the bonds also 2 days ago. That was also in the Tiger Forex report. So we've been wiggling and jiggling this whole week. Anyone that read it on Tuesday, we've really been we've been rocking it out, haven't we? It's been a fun time. So caught a lot of the swings in the Forex market, especially using our indicators, the other markets in real time, the bonds and oil, which have helped us stay out of trouble. So right now, let's take a look at what's going on. US dollar Swiss, which is where we're at. We are long this currently. It is hovering just below the highs. It's looking good going into the afternoon trade. It's 12:40, getting close to 1 o'clock. So we got about an hour and 20 minutes until the bonds shut down. That's just the bonds. It's all the interest rates in America. So the cash treasury bond market closes, or treasury market closes, as well as the futures. That leaves us one last hour of this U.S. equities trading. FX, we know, blasts through the U.S. markets and closes after everything. The last time after 3 o'clock, don't mess with anything. There's not much going to be left, I would assume, and it's really a bad thin trade. Plus the spreads get really wide. So if you're not out by 3 o'clock unless you really wanted to get out. Wait until Monday, unless you really need to get out of a trade. So, but yeah, looking good for going into the 2 o'clock. I'm looking forward to 2 to 3 o'clock. I think we're going to have a lot of action. I'm expecting to see a continuation of U.S. dollar strength. So, for transparency's sake, you know that we're long U.S. dollar Swiss. I think there's a good chance that it's pushing these highs. Are we going to shoot up to 98.39? Probably not. I wouldn't expect an over-aggressive surge to happen, but I would expect to see a follow-through, maybe pushing new highs on the day for the U.S. dollar versus many of the pairs. And let's see what's going on with some of these other ones. So the Euro-U.S. dollar, which remember, it made a big low today. Whoops. Let's get this right. Euro-U.S. dollar. Sorry about that. All right, you can see that this one, it was hovering underneath support. Now it's getting tighter and tighter and tighter. I think the news is coming on the euro right now. So it made a nice lower move low. It had a nice big bounce today. Took a little profit taking is what I think. I think the bears pushed it, and a lot of those week longs got squeezed. There's those people that think that, oh, we're not going to parity. Maybe we're not. I don't know. But I'm pretty much on, you know where my point of view is on that yeah, we are. We're going not just to parity, we're going way below it. So sell rally forecast remains, and it looks like, I think, into the afternoon. You know that I'm short already. I would say that odds are pretty good that you have a good chance of ending up lower than we are right now. If you risk the high of the day today on any aggressive short, if you're not short already, I would say that's a low risk play. But if that's not in your trading plan, which I know it's not, you shouldn't do it. Just like you don't do anything that we're talking about here. You're learning how to trade, learning how to look at these things. So definitely look at these markets in an hour and a half and see where they're at. I would assume, and that if the bonds settle where they're at and oil stays higher on the day where it's at, that we'll get another gush. Remember, the dollar was really strong overnight, and then it's been the course of the American markets, and this has been a trend where while the American markets are up, the U.S. dollar all of a sudden falls apart and starts getting faded. And then all of a sudden, when we get the interest rate market close with that last hour before the stock market closes, or even after 3 o'clock, the currency is just, boom, dollar comes roaring back, and the other pairs start to fall apart against the dollar as you head into the Asian trade and then get looking forward to the European trade. Today, obviously, being Friday, we're only going to have a couple hours left. That's why I don't think you're going to see an over-exacerbated rally in the U.S. dollar Swiss. But I wouldn't doubt that we end up settling lower on the day in the euro. Will we take out the low from yesterday and get down to these lows of today where we got down to earlier today? That might be pushing it. But I think that for the next couple hours, you got a nice low-risk scalp for it, and then get out before 3 o'clock. So that's what I have. I'm staying long the U.S. dollar Swiss and the U.S. dollar yen into the weekend. My euro U.S. dollar short is going to be gone for sure. That is going to be off the table once we get through the next hour and a half. So once we get closer to 3 o'clock, I don't care where it's going, I'm getting out of that one. All right. So euro U.S. dollar and Swiss, we've covered that one. And by the way, while I'm going through this last little loop around the world, if you guys got any more questions or anything, oh hey Anurag, we're connected on LinkedIn as well. That's awesome. I love it. So good. The more we can communicate, and since we're connected on LinkedIn, you know, just like you're here, you can shoot me a message there. I get a lot of messages on there. It's tough for me to follow everything, but you know, if you need something, reach out. I'll try and get back to you on that as well. So all right, so now we are back here on this. No questions. Let's go to the GBP USD. Remember, for transparency's sake, I am short. Why is this? Oh, yeah, duh. GBP USD. I need to get some food in me. It's time for lunch. Excuse me. All right, so British pound US dollar looking a lot like the euro, except it didn't make a lower move low today. It made a higher move high. This could be a rejection. If this falls back on support, and follows through over the next hour or two and starts to sell off, I'm getting out. I'm not going to ride this through the weekend because this one is not as, remember I told you, the pound, unlike the Swiss and the euro, is not as weak against the dollar. So I think there's a good selling opportunity against the high of today. I'm already short from today anyhow, so I'm risking just above the high. You know I'm getting out before the end of the day, before 3 o'clock. So basically within the next hour and a half to 2 hours. So, there's not much I'm looking for on that one. I do think the trend will continue lower, just not as severe as we're looking for where we're staying long. US dollar JPY for transparency. Once again, I am long the US dollar JPY. We had the sell signal last week. That was this day after the head, this downward here. That was a bearish engulfing line, which if you read the book, High Probable Japanese Candlestick Patterns, which the link is in the chat, you can learn how to trade that. I even mentioned, and that's pretty good, is like when you ever have like a classical bar charting thing like a head and shoulders that does occur, or a reverse head and shoulders, and there's other ones too, combined with high probable Japanese candlestick patterns, especially on a daily, weekly, or monthly basis, now remember, never try and pick a top or a bottom, but it does catch a lot of short-term turns. So this one we had initially a week and a half ago, this sell signal. Remember earlier in the webinar we failed to reach our corrective zone. We've been trading pretty neutral, trying to make a rally and make a higher move high. So the question is this a shoulder or is this just the beginning of a new leg higher? Well, right now it's still a shoulder. So if we fall back and take out this neckline, we're definitely looking for us to fall into support here, down to 134.35, down to 133.63. And if the head and shoulders really prevails, we could see a correction all the way back down to here. One problem, bonds are railing, oil's railing. I don't think the head and shoulders is going to happen. I think that next week, for any of you that are paying attention here on the video or watch us later when it's just in recorded, if you watch our videos next week, I got a funny feeling with the way things are shaping up this afternoon that we are going to see the US dollar rally, the head and shoulders fall apart here. And you know what? We had a sell signal that worked for a day. Didn't get all of it. It did hit, if you read the book, High Probable Japanese Candlestick Patterns, though. It did get us to the point of where you start to lower your risk. So there's another thing is in the book, we do have a methodology. Here's something I want you to remember. Every system fails eventually. No signal works 100% of the time. But you know what does work? Methodologies. There's a difference between a system and a methodology. Methodology keeps you from being subjective, but also keeps you nimble. It keeps you it's more about not making mistakes than doing the right thing. Okay, and that's the biggest thing, is that the more mistakes you can cut out. Think about like this: professional athletes, when you lose games, whether it's baseball, hockey, football, whatever it is, it's because of errors. It's not necessarily because of ability. When you get to a certain level, almost all of you are an average, as an average, you're at the same opposite forces, whether you're in baseball, football, I don't care what it is. Once you're at a certain level, yeah, sometimes there's a team that dominates, but as a whole, if they're evenly distributed, you're at the same level. So what's the difference between a winner and a loser? One is intent, and two is errors. The more mistakes you make, the less practicing you do, the more rough you are at your skills, your skill set, and that's where your problems happen. Same thing as in trading. Connor K, as a scalper, I found the supply-demand strategy to be very powerful, but I have a struggle watching for news as an impact on the markets. Any valuable news sources like FX Factory, etc. I'd be careful with the news. That's another thing. It's just like latency when it comes to trading. Your news is always in a lag. And also be very careful, especially as a new, young retail trader with scalping. You can't scalp anymore. I've had this conversation a lot over the past week, especially with a lot of crypto traders. One of the people, I had a consulting call with somebody who's been with me before. Paid for my advice on his trading, and he started to expand, and he's like, I'm scalping intraday, and I'm like, whoa. Okay, if my book, even though it's on candlesticks, forget candlesticks as a methodology to use for signals. When it comes to time frames, the reason most people fail with candlesticks is because they try and use it on a 1 minute, a 5 minute, 15 minute, and a half hour chart. Guess what? It's never going to work. It'll work sometimes, but the majority of times it won't work. On an hourly, daily, weekly, and a monthly basis, a yearly basis, not so much. Then it starts to work. Less noise. With the advent of algorithms, being a scalper intraday, there's no such thing anymore. There's so much noise and so much. First of all, there's ghost orders and vacuum patches of volumes for where you're going to be able to find resistance or support, or when they hit these pockets, they explode through them. They're so illiquid that they'll bounce to the next pocket of big orders. So they overtrade. So you sometimes see on a chart, especially in a lot of markets now, where you're like, it's trending higher move high, higher move low, and all of a sudden there's this erroneous wild spike up or down. And you're like, is that a data glitch? No, it's not. It actually happened. Well, where do you see this the most? You don't see it on the weekly, the monthly, the yearly, the daily as much, or even the hourly. You know where you see it? You see it on the 1 minute, the 3 minute, the 5 minute, the 15 minute. That's when you're going to see in those time frames you can shake out that little area, but you're not going to get to the bigger levels. Okay. One of the biggest things is that, remember what I told you about reward to risk ratios? This is one of the biggest things for money management. If you get anything out of this video today, think about this one thing. Whatever your strategy is for getting in and out of the markets, never take a trade for less than a 2-to-1 reward to risk ratio. And the only time you do that is when you're right 7 to 8 out of 10 times for whatever your methodology or your system is on average. Because otherwise, if you're at less than 2-to-1 or only at 2-to-1, you're lucky to break even. So why are you trading if all you can do is break even with whatever you're doing? And this gets back to money management and cutting away with errors. When you start to increase your time frame, you give yourself more opportunity. Do you increase your risk? Yeah. But here's the problem, though, or the good thing, rather. As you increase that little bit of risk, your reward to risk ratio explodes. So now all of a sudden, instead of you being able to only making 2-to-1, and God forbid 1-to-1, I've known some people who are like, well, it's right 9 times out of 10. I'm like, yeah, nothing's right 9 times out of 10. Well, oh, that's right. Trading delta neutral and options is. Guess what? The one time it's not, it erases all your profits, and that's a video for itself. I'll tell you the delta neutral story one day. If anybody wants to hear delta neutral strategy and how something that by law, financial law, is right literally 9 out of 10 times, and that's not a trading thing. It has to do with options and Black and Scholes and whatever. But it's a spread trade where you'll at the very least break even. You may not make money, but you're not going to lose. But the one time it doesn't work, and that's why scalping is also bad, you're going to have an erroneous leg that moves so out of whack. Like, for instance, if you trade futures, 1 month you're trading the front month, and then all of a sudden that same market the other month flies off. It's just so erratic, or even if in an FX cross, you're trading, let's say, the euro US dollar. All of a sudden, some big brokerage house finds out that one of their customers, they got a huge margin call. All of a sudden, they got to liquidate a monstrous position. This makes news, or it starts hitting this whatever. All of a sudden, these orders come in. That in itself, for one little brief moment, will cause that 1 minute to 5 minute just to overtrade so much. So if you were long or short, if you were on the wrong side of that, well, you're getting blasted unnecessarily. So you're taking all kinds of losers that you do not need to take. Why take losers? Just to say I'm trading? I mean, and I'm not being critical of any of you that are out there that are scalping. If you're wondering why you're frustrated and you have frustrating days, I'm explaining to you why you're having these things. You used to be able to scalp on the trading floor. You know why? Because you had the edge. You're not buying the offer and selling the bid. You are the bid and the offer. So right there you have an edge. From off the floor, you don't have that edge. Then you have the gap in the spread to begin with for getting in and out. So you give up your edge getting in and out, and depending on the liquidity and also the volatility, that will be indicative of how that spread moves, even from the time you get in and also versus when you get out. These are things that work against you. So even if you're right on the trade, you have these minute things that they tear away at your profits. It has to do with a lot with crypto traders. Like I know some people that they were doing it and they're like, I'm profitable on so many trades, but I'm not really making any money. I'm like, well, okay, well, who are you clearing through? And they were going through one of these fly-by-night, they don't want anyone to know where their money is because they're trying to avoid taxes, which is illegal for one. And if you're going to do that, try that. Well, guess what? Good luck trying to withdraw your money as well. So anyhow, they're getting in and out of these trades, and I'm like, well, okay, well, what's the spread? And he tells me what the spread is getting in and out. I'm like, okay, so what are you looking to make? Like, how much of a gap from buying to selling? Are you looking to take profit? And he gives me the information. I'm like, well, if it costs you this and this to get in and out, so it costs you this much per trade, whether you're right or wrong, and then you add this up and that up, I'm like, well, you need to be right almost all the time. Anytime you have a loser, it's compounded by that edge against you. And then also there's certain times where those spreads widen out. And that's why I mentioned earlier, like today, this afternoon's trade, we're heading into Friday. Even during the week, U.S. time, after 3 o'clock, all of a sudden the spread's starting to widen out, even in the U.S. on these. You know why? Liquidity dries up. So that's when you got to pick and choose your moments, knowing when to trade and when not to be active unless you absolutely need to be. Let's see. As a scale, so as far as the news, also, yeah, news trades, if you're trading options or even the FX markets and futures, news events are great to trade. I'd be more concerned about the time of when a news event or a news release is supposed to occur. I would trade only the economic numbers and big things like that. Those are crucial, especially in different Forex pairs. You know, like today was unemployment for the U.S., big for us. I still look at unemployments in other countries. Also, there's central banks and things like that. When it comes to stocks and options, there's a lot of noise, you know. So, but also take the news with a grain of salt, because most news outlets, they're not front end. Meaning, like you mentioned here, Forex Factory. Forex Factory waits for a bunch of other news sources to release stuff. Then they have an analyst read it and basically come up with a consensus. They're not doing like what I'm doing, you know, or some other people do, where we analyze stuff and we're giving you our outlook, but in front of the news and after the news, okay? And it's live, it's in real time. I may refer to other sources, like for instance Reuters. Their news, they're one of the most unbiased of all the news sources. So I'm not going to get into who's left, who's right, but the reality is especially in the financial sector, if you think that CNBC is a source of credible information and even credible individuals, you're out of your tree. So Jim Cramer and his buddies have been front running his show for 2 decades. I remember before I left the floor completely, I'd be like, this guy's got this Mad Money show, and he's just like, you know, 3 stocks a day, these are my picks. If you would have, from the beginning to now, taken all of his picks into a portfolio and you even remotely held them kind of like he said to do, you'd be down money. However, if you would be on the inside and if you looked at the data, it's amazing. These stocks that are trading normally in like a $2 or sometimes no more than a $3-4 range, all of a sudden have a $10-15 range and are up like $5-8 that particular day. Settle. His show comes out and they're like, hey, you know, we took this and blah blah blah. And they don't show you the chart; they just give you the name. And then some people, they don't even look. They just start putting in orders. Oh, Jim Cramer said buy this. Blah 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 blah. You know, I'm gonna buy it. I'm gonna ride his coattails. Go ahead, do that. See how long that works. And I tell you, it will not happen because the money has already been made. There will be a little pump run up. It's a very, very along the legal lines of a pump and dump. It's not illegal because the way it's done, it kind of keeps his fingertips out of it. But we know the information is leaked. So he's either getting a back end payout from somebody or he's making it somewhere else. Definitely friends of his are, because how is it that these stocks that don't trend or move, all of a sudden the day of his announcement, when there's not any scheduled release, you don't know what stocks he's going to release. How are they up $5 to $10 sometimes on those days? And then afterwards, you know that they're just selling to the people that they talked to that evening, who can't place their orders until the following morning. And then all of a sudden, you have all these buy orders coming up. So it's like almost guaranteed, even for them, if they didn't run the market up from their own buying the night before, they're long going into tomorrow's trade. Boom, there you go. So when it comes to news, be very careful with that. Use your due diligence, pay attention to their advice. Now, I'm not saying everyone on CNBC is bad and not good to listen to. Rick Santelli, fantastic. The guy knows the bond market inside and out. I could listen to him all day long. I don't agree with everything he says all the time, just like no one agrees with me. No one should. We all have our opinions and our history and our knowledge in the business, but he's legit. There's plenty of other pundits out there. They're just out there selling their wares. They're selling books and systems and stuff that, guess what? All that stuff is just really expensive garbage. It's going to collect dust, and you're going to end up having a bad taste in your mouth, and also the financial industry when you go through that process. So be careful. And I'm not saying that I'm the best out there. You got to figure it out for yourself. You take me as it comes in baby steps, and as you see, I always prove myself to my customers. That's why eventually they do come to me, and we do have private consultations and what have you and whatever. So I work with my people. I give a lot out for free. I tell you stuff that most of these guys wouldn't even begin to talk to you about unless you were sitting in front of them paying them, you know. So be mindful of that. But great questions. Great for your input on that one. So let's see. The market will pass. Let's see. So is there a possibility the market will fit past my short? I don't quite get that last comment there. I don't know if it's just not all coming through on the chat or not. Let me double check on YouTube. Okay, that's good. All right, so let's finish up. We had transparency on that. Now we're going to go to Australian dollar, US dollar. I have no position on this one. This one's looking like it's given up on its rally, and it might fail again also. I would watch for this to hit support. Remember, it's banging a bear trend right here. It just came off of some key support the last week. It keeps on trying to get through these lows. I think when it does, it's just going to consolidate lower. It's a grind. We talked about this earlier. New Zealand dollar, US dollar. This is the one where we got one of our people on the chat from India looking for a bounce here. I hope it does happen. Let's stay positive. Just key off the low from a couple days ago. If it falls below there, I'm sorry, man. I don't see this one bouncing back anytime soon unless we get a huge sell-off in the bonds and also a big sell or a big monster rally in oil. So, all right, let's go to U.S. dollar Canada. This is the one that is the headache of them all. Stay away until we get some confirmation of a real trend, let alone the trade imbalance, the trade war that's not even really being talked about between U.S. and Canada, and the lack of being able to cross the borders, and then also restrict what does come. I mean, it's like every day it changes. If you think that the truckers and the news up there in the U.S. was news months ago, I think it's just they're so sick of it. We don't get very much of anything, and until we have a positive end to this, I don't even know what you want to call it. I just don't understand how our administration and their administration can't work together. So this is one. If you're a Canadian dollar cross trader, U.S. dollar Canada, I think, is just the one to stay away from. Try some of the other crosses. We'll take a look at them. Boost Junk, are your yellow lines fib zones? My yellow lines, I think you were looking at some of them. Absolutely, yes, they are. Usually, I use yellow to represent the Fibonacci, 50% and the 50% and 0.618 levels. Very good notice there, Boost Junk. 50% is a Fibonacci level, it's a Gann level, it's a floor trader level, it's an old number, and this spans even outside of the U.S. when it comes to a retracement target. Now, does 50% mean that it's going to hit to the tick or the pip or whatever you want to, or that level, whatever, to the number? No, it's a level to shoot for. It can fall short of it and can fall long of it. But when it comes to corrections, like if you're, for instance, there's three. There's the point 318. You got the point, or 312. You got the. Here, I'm going to show you, so I can explain this to you guys. All right. So U.S. dollar, JPY. So for instance, in this correction here, if we go from the fib, go from this high to this low. Okay. So here's the point 618, here's the 0.5, and here's the 0.382. Okay, and that's from this high or this low to this high up here. So as far as a retracement, okay, I gotta make this cleaner for you. There we go. All right. So if you're in a very bullish trend, and I don't use the 0.382 as much except for like in a situation like this. This is why I was saying how when this market came here and it failed to make it down to this area, it basically hung on the 0.382. When you're in an aggressive trend, if you only come to the 0.382 and it holds, that tells you how strong that trend is, and it's most likely remaining intact. When you come down to 50% to 0.618, that's like your extreme area. That's where, you know, when it comes to trend trading, you want to trade the action, not the reaction, because when you're trading the reaction, it's a counter trend trade. You're taking a lot more risk, and your reward to risk ratio is typically weaker. So, but if you're going with the trend, your risk is reduced, and your odds of getting more reward to risk are increased. So, meaning that if you are buying in that 50% to 0.618 area, where if this trend is going to hold, this is one of your last best areas from as far as this swing low to this swing high, where if this trend is that strong, this is it. It will hold here, go and start to bottom, start to develop a sideways to bullish trend. It will go and try and take out the highs. If it fails or whatever, it becomes choppy. We'll see. That will dictate what happens later. So yeah, I don't use the 0.382 all the time because you want to have room. You don't want to get in front of a trade. You know, I mean, sometimes you don't want to try and pick a top either. You know, to say that 0.382 would be the place to jump in all the time means that you're trying to, you found a topping area and you're looking to try and pick a bottom real quick. Don't rush it. See if support holds there. And if it doesn't, like here, it held pretty solidly. When it doesn't, then you're like, if you fall through 0.382, it's very likely you're going to get to that 50%. Now, 50% is a psychological number, and it has so many other things that besides fib, where a lot of traders, where they look to, if they weren't in a market or a trend to begin with, that's where they start to look. I mean, think about people buy stock market correction, whenever the stock market breaks, you know, between 15 and 25%, a lot of people start throwing money into it because, well, you've had a 20% correction. Even if it just goes back to where it was, your original money is back where it was, and your new money you've made, you know, 20% on. So that's why you look for these areas to follow a trend trade. So when you get down to 0.618 to 50%, if you are right, at least initially in the short run of finding support, that gives you enough of an area that if it's going to fail, you're going to buy in this 0.618 to 50% area. Odds are it's going to get above the 0.382. You'll have a break-in stop rising, you know, and then becoming a profit stop as it goes higher. And then if it does fail, you're going to make money. You may not make as much because you're not getting out at the top, but then no, we're not trying to get out the top and the bottom. What you're trying to do is have a successful trade and minimize losses. This is one way that you do it. So yeah, very good question, Boost Link, about the fib zones. That's why I use them. And yes, those yellow ones I use because of these other colors. It just makes them stick out as far as setting up that. Very good observation. Really, really like that. So let's see. All right, so we've been talking about the Forex markets here. We've been talking about the cryptos. Cryptos I don't think we really need to get back into too much. It looks like our viewers on YouTube are starting to wane a little bit. No more questions or comments. Anybody out there on Twitch got anything to ask before we wind down this webinar? I got a couple links I want to share with you guys that can help you out. So why don't we cover that while we wait for a couple questions. This is not just promotionary link stuff. This is stuff that can help you out with your trading. Costs you nothing. So, all right. So you already got the LinkedIn link. You got the YouTube link and the Twitch link, I think, already. And you got the high probable Japanese candlestick patterns link. You got the one to the Tiger Forex report. You got that link also. Remember that this month they're running at 25% off, guaranteed, grandfathered off the subscription price indefinitely. As long as we have the Tiger Forex report, you will get 25% off, unless you skip a month or a payment, in which case then you will be moved up to the full price. And also, you have a 30-day money-back guarantee. So if you don't like it for whatever reason, or even if you do and you don't want to pay for it, you can check it out for a month, tell your friends, and maybe then one of them will sign up and pay for it. So, yeah, so I'm working with TFN and those guys. You see me on Wednesdays there. Check out those links. Also, let's see. Let's give you a couple more links to check out. So,
let's see. While we got that yen chart, let's go to here. So, from our home page here, we already gave you the forex-trading-unlock.com web link. Remember, this is our home page here. Remember to check out the workstation page. That's where we were doing the work on the chart. So when you guys are at home, or even when you're traveling, you got your laptop or whatever, you can work on these charts. You go to the forex-trading-unlock.com website. You click on that workstation page. And the great thing is starting out your day. See, there's one ad right there. That's it. And the nice thing is you can follow us and you can post to LinkedIn. And this actually, you want to go to our LinkedIn page or me. This is how you see something that you don't see in the real from these fake people. Here we are on LinkedIn right away. Here's my company page, 16,000+ followers. Let's go to analytics, competitors. This is all in live and real time here, folks. Forex Trading Unlocked Incorporated is now number 3. We moved to the number 3 spot a couple weeks ago. See the new followers? That's what we average a month. We are right behind this other one here. We will probably catch them within the next year because we get 10 times the amount of followers a month. With your help and you guys spreading out the information, maybe we grow that. This other one here, it's going to be a little hard to catch them, but you know what's really nice is when you look at this, we look at organic contact metrics. This is why I love your following, love your comments, and your interaction on the chat. See this? Total engagements, total posts. We are the most organic Forex page on LinkedIn. So there's other ones that are close and coming up, but we have the most interaction, and the algorithms like us because we're transparent and we are real. How about that one? So also you can go and hit the other LinkedIn one. Oops, sorry, that's the wrong one. Go to the first one, and this will show you. Oh, that's right. There we have our big page, which has a 16,000 followers, or you go to this Forex Trading Unlocked page, which has just under 300 members. This one here is a little bit different. This is one where I can contact you and I interact with these people directly. It's kind of like our own personal Forex club. The other one is for contact and business and getting to know each other, but direct contact, I mean, unless I'm connected to you on LinkedIn, we can't have any direct messaging. Through this, we can have direct contact. Check it out. You go on LinkedIn, you can see, or you can go right from our website, once again, forex-trading-unlock.com, on any of these pages, and you can go to Twitter, and then you can, what you can do here is you can tweet about the page, or from the side here, you go here and hit Twitter or LinkedIn or Facebook. This is a way just to promote. Also, as we move down the workstation page, you can see here's all the numbers. You can see for July 11th coming up next week. Then we toggle down here. Every chart here has a bunch of technicals going on here. You can see what's going on as far as performance, technicals, see more technicals, blah, blah, blah. This costs you nothing. Then you can also get rid of the volume, make it a little clearer. You clear this up, and look at this. You got a nice little workspace here to work on the charts, just like we've been doing here. Costs you nothing. You don't got to log in. You don't have to worry about your personal information being excuse me, stolen or anything. Now, I'm not saying I use NinjaTrader and I use my charts for my trading platforms where I lock things in. But when I'm traveling, like if I'm on the road, I get on my cell phone and I pull up my website. I can look at a chart. It costs me nothing. I don't log in anything. I have no risk, no exposure, no hacking. These are things that you also might want to think about as far as using our website as a tool. The main reason my business is where it is, it's not because I've been in the business for over 31 years. I've been in the trading business since 1989. I got out of the analysis and retail sector over 20 years ago, and just trading for myself. And then things changed, and it'll be 14 years ago. Our 14-year anniversary for Forex Trading Unlocked Incorporated is coming up in August. I needed a tool for me. I got sick of logging into my trading platform just to do analysis and see what's going on. I also didn't like going to a lot of all these other Forex websites. You know why? I'm not going to call them out by name, but them, just like CNBC, which I will call out, is just a big marketing platform. You get on there and you have pop-up ads and ads and ads and ads, and I'm not against advertising. Obviously, I have it. I do have partner companies and companies I work with and promote products that are valid and viable in the financial space. But I don't bombard you with it. I mean, you get the soft sale, and guess what?
This is a tool that I use. You know why I go on my site? It's not just because it's my site. It's because I can go on there and it doesn't overload my cell phone. I can go on there and my computer doesn't have all this stuff being tied up from ads and pop-ups, and you're waiting just to get a chart to use it. Like, I can move around this chart. Look at how clear and flush this is, just like this. We're doing this in real time. There's a little bit of a delay, but on Twitch and YouTube and on Discord, you're seeing this happen in real time. Oh, by the way, I forgot to jump on Discord to see if there's any comments. Okay, got a couple people out there, just no comments. But on these other sites, you can't do that. So you can draw up information, you can draw up headlines, some news and stuff like that on different parts of my site. You can do technical information, you can pull up all these markets, and guess what? You know what else you can do on this that you can't do on other FX sites? You can go into here, you can go to stocks, futures, CFDs, cryptos, indices, bonds, economy. You can do all of that, and you don't have to deal with all of this pop-up and logging in. You're not giving me, you don't even have to be on my email list. You go ahead. This costs you nothing. It's a tool you can use and wherever you're at to check things out, and there's times where, you know what, you don't want to go onto your platform and do whatever. You're just seeing what's new and what's going on, see if there's a reason for you to log into your platform and go back to the office or go home or turn your computer, log into your brokerage account. So these are all things that I set up for me. That was not for you initially. I did it for me, and then all of a sudden it's like friends of mine in the business, they're like, well, why don't you do this, and why don't you do this, and why don't you do that? And then we started streaming with other people a few years ago, and I didn't do anything with it. I just helped them out with their stuff, and then all of a sudden it started to be like, okay, I have all this content I'm creating for other people, well, I might as well start putting it up on my site and stuff like that. And obviously you all know about the social media growth and how you're watching me through Twitch or YouTube or Discord right now. This is how we interact. This is how we grow as a community. And that's what we're doing. We're building the Forex Trading Unlocked community, and we are working with other exchanges, brokerage houses, and verifiable financial companies that you can do your due diligence on, take your time with us, and see that we're here to make money and to trade the markets, but we're also here for you, and we're also here to combat all the scam artists and the get rich quickers, because there are so many of them out there. Especially the Forex space is now not in its infancy stage anymore. It's become more like the rest of the derivative space, but the crypto space is like how Forex was 25 years ago, 30 years ago. It's the Badlands, it's not regulated, and all kinds of other stuff. So we really appreciate all of your time and your input today. I hope I've answered all your questions. Please check out forex-trading-unlocked.com when you get a chance. And yeah, it's been quite the day. We hope that you guys are doing well with your week, and good luck with it, and you have a nice weekend. And also, before we go, we're going to just pull up one last thing as a little reminder. If you haven't done so already, hit that subscribe button on YouTube or Twitch or Discord, and also like and share. And then also, by the way, while you're at it, check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. We'll be having a promotion for that in August where you can get it for free as a DOM for a Kindle version for 30 days. So, and anyhow, appreciate it. Come back and see us again later at forex-trading-unlocked.com. I'm Teddy Keck.